moment. All right, everything looking good. Should be live here any moment. Go ahead and get this thing started. Hopefully everyone had a good weekend and ready for another week of volatility and big moves. Let me know in the chat if we're coming through loud and clear. Everything looks good on my end. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is September 12th, 2021, 8 p.m. Eastern Standard Time. And before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so let's go ahead and jump right into it. So 10-year Treasury yield on Friday obviously picked right back up. We had a fairly aggressive sell-off on Thursday. Everybody was extremely bearish, keeps talking about how yields are going to break down. Obviously not how we feel. We did get the hard buy signal from the neutral zone right above 40. We are still in a strong positive uptrend. The histogram is green. It is above the zero line, and the slope line is blue. That is momentum in our favor and continuation to the upside, as well as a hard buy signal and Stokes angle to the upside, and a powerful green knife starting to form here. We obviously pushed back up off of the 200 exponential moving average, and we got basically stopped right here at the 200 simple moving average. And if we just turn on our drawing tools and take a look, we can see, let's turn off the master and just look at our drawing tools. So very clearly what has happened here. Well, you know what? Let's look at the big picture. It's been a while since we've taken a look at the big picture. So here we have our 10-year Treasury yields going back to the peak back here in 1980, the all-time high on Treasury yields when Paul Volcker jacked them up to almost 16%. And since then, we have been in a downtrend. What does that mean? It means bonds have been in a parabolic uptrend for 40 years, and the yields on the bonds have been in a parabolic downtrend for 40 years. So we have been obviously finding resistance at the top here in red and support here at the bottom here in blue. And now if we take the Fibonacci from our top at 15.5% to our bottom here at basically 0.4% or 0, we basically have now in place our red Fibonacci. So now what we're going to look for is correspondence between that Fibonacci and then also our resistance support. Here we have a dotted support line, the heart line of our, basically like channel here that we've drawn. Obviously it's a little less of a slope on the top of the channel and a little more of like a parabola slope on the bottom of the channel. And then we've just basically used the heart line to mash up in the middle. And the most important thing is we see consistent support and resistance along the heart line the entire way throughout the range. So we know that these are key levels and key things to pay attention to. So now here, if we just zoom back in a little bit and we just take a look at our chart here without the indicator oscillators on, what we'll notice is we were having clear interactions with the heart line back here in 2016, bounced up, touched the top of the channel perfectly, coming off of the bottom of the channel in 2012, and then once again from the top of the channel here in 2018 to the bottom of the channel here in 2020. So we see very clear reactions off the top and bottom of the channel, and then obviously the heart line as well. So we had our left shoulder come down here of the inverted head and shoulders and landed perfectly on the heart line. We came up and topped out at this blue slope line, which is now acting as the neckline of our head and shoulders, the bottom down here being our head. And then when we bounce back up, we found resistance once again and cemented in that neckline. And then once again, we came down here and our previous little push down here, where did that come down to? Well, it came down perfectly to our heart line, at which point in time we started to round off and move back to the upside. So now what we have taking place on the yields here, we have a very clear either head and shoulders, left shoulder, head, neckline, right shoulder, and then we're coming back up to the neckline at roughly 1.6%. And then we have alternatively a very clear cup and handle, a rounding bottom pattern, and then a second, basically a channel going downward inside of that range, like an internal retracement of the pushback up here, the channel coming down, and then we break out of the channel, we come back up and put in a second smaller rounding pattern and then come back up to the neckline. And then the measured move of the break of that bottoming pattern is from the bottom or the head of the inverted head and shoulders, or the bottom of the cup of the teacup or cup and handle, to the top or neckline. And then when we move that up to the top here, that's going to give us a measure move back up to roughly 3%. And where does that line up with? Well, let's look at our chart here and see why this is so important. Well, we have very clear interactions on the resistance the entire way down. Touch here, a couple close ones here, touch here, touch here, and then that would give us a touch here one more time at the measured move. And then here on the bottom, we have a clear touch here, here. No one else has this chart because I made it up and came up with this my own. So if you see this anywhere else, just know that they have copied it from me, which is perfectly fine. All my content is free, and obviously my technical analysis is as good or better than just about anyone else in existence. So without floating my own boat too high up here, we can see now we have quite a bit of confluence taking place here between our key Fibonacci levels and then also obviously our smaller Fibonacci, which is the yellow Fibonacci from the top back here at 3% in November of 2018 to the bottom here at essentially 0 in 2020. So now if we look at these Fibonacci's and how they line up, what we'll notice here is on the monthly chart, going back to our top here, to essentially what we're assuming will be our bottom here, because we've basically reached 0 and this can't actually go negative. We have basically a clear interaction here at the 886 where it acted as resistance and support. We have a clear interaction here at the 786 where it acted as support, and then again here as resistance through this area, and then peaked slightly below it here. And then from the 618 we have clear support and correspondence, and then resistance after we flip that. Each one of these is a support resistance flip, an SR flip. Next we have the 0.5, clear support here, break down below it, break back above it again, and then resistance, break up to the top of the channel and top out, and then we could not get back up to that level again. And then here at the 382 we have clear support. A couple times we violate that support, but we can see the clear interactions on the monthly. And then of course here we have broken up to it, and that is roughly where we topped out on our last push. And then obviously we have our 236 down here as well, and the 236 was the top of the reaction rally candle rejection that later on ended up being the bottom. So we have very clear resistance and support off of our red Fibonacci's. So now let's go and look at our momentum oscillator indicators. Again here on the monthly, let's look at this similar signature and what happened each time it did. So it's going to be tough for you guys to see. Let me just scroll this over a little bit. Here we have the bearish control zone, hard buy signal, and then continuation to the top of the range. Okay, and then here we have the bearish control zone, hard buy signal, and then continuation from the bottom of the range to the heart line. And then here we have once again bearish control zone, hard buy signal, back to the heart line. And then here we have bearish control zone, hard buy signal to the heart line. Here we have bearish control zone, hard buy signal to the heart line, almost the top of the channel. Here we have bearish control zone, hard buy signal, back to the heart line. You guys getting the point right now? Bearish control zone from the bottom of the channel all the way to the top of the channel, hard buy signal, bearish control zone, heart line, bearish control zone, top of the channel, bearish control zone, almost to the top of the channel, and then rejection. And then now here we are in the present and most relevant time frame. Bearish control zone, hard buy signal, top of the, back towards the top of the channel. And then obviously here we have one of, if not the strongest bearish control zone, basically the bonds yields bottoming out at 0 on the TNX, hard buy signal, and then we have made it to the heart line. And then once we got on top of the heart line, we came back down, found it as support. So is it unrealistic to think that we can now get continuation to the top of the range sometime in the next couple months, couple years? We have also, again, we're going to look at the signature on the TJD TDMACD. We have a bunch of green histograms. We flip the slope line over blue. Here we get rejected at the heart line and come back down. And then once again, bunch of green histograms, flip the slope line over blue, and then again get rejected at the heart line and come back down. Now here we have obviously broken above the heart line and we're on top of it. And now here we'll notice that we have all the green histograms, we're on top of the slope line and it's getting ready to flip over blue. So if the majority of the times we got essentially 50% of our channel move, so if we're at the bottom of the range, we get the hard buy signal, we move up to the middle of the range. If we're on the middle of the range, we get the hard buy signal and flip the slope line over blue, we come to the top of the range. We can get a rough idea that what we would expect to happen here. Again, flip it over blue, come to the mid to half point of the range, back down, and then the top of the range. So here, if we do the same thing again, flip this slope line over blue on the TJD, TDMACD, we have left the bearish control zone. We've gotten a hard buy signal. The Stochs are all the way at the top of the range. What do we expect to happen now? Well, we're finding support at the heart line. So more than likely what's going to happen is we're going to move up to the top of the range. That's our sell target. That's also the 0.5 Fibonacci in red right here, the macro Fibonacci. And then also we have the top of the Fibonacci here from 2018 to the bottom of the Fibonacci here in March of 2020. And then if we look at that, how has that been acting this entire time? Well, we came all the way up here, topped out, tried to find support. We topped at the 618 right here, found support multiple months, in a row, and then broke down from that. And where did we find support at? Perfectly at the 0.5. So now what do I expect to happen? One of two things. We either get rejected now at the 618 and come down lower to the 382 and our potential target at the 236 of the macro red fib, or more than likely, based on the momentum and all the things pointing to the upside, we come back up here to the 618, break through that, touch the macro 382 here in red, which is also the heart line, consolidate for a short period of time, and then break to the upside. When we break to the upside, our initial target would be the 786 here in yellow at 2% yields, which is what the majority of people that were late to the party are predicting for yields by the end of the year. Will it happen by the end of the year? I don't know. We'll have to wait and see, but I think we are headed that direction eventually. Next, we have the 886 and 0.5 here in red, and then also the top of the channel, the measure move of our cup and handle pattern or inverted head and shoulders pattern, or the break of the range, which also lines up perfectly with the top of the channel here in red, and resistance, which is where I think our yields will top out at 2.82. Now, the real question is after that, once we get to the top of the channel, does that mean yields are just going to go through the roof and Paul Volcker is going to be back and we're going to go back up to 15% and we're going to curb this inflation and blah, 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 blah? No. You know what's going to happen is we're going to continue inside the channel that we've been inside for the last 40 years for another 40 years or however long, until the system breaks, until the world crashes, until we get hit by a meteor, until we launch bombs and blow up our race, until aliens zap us with the death ray. Whatever the hell is going to happen that's going to be a macro event, it's going to happen one time. So to assume that we're going to come up to the top of the range, or assume we're going to come down to the bottom of the range and then all of a sudden break out of something that's been acting as support, acting as resistance for 40 years is absolute lunacy. More than likely, 99.9% of the time, the same thing that's been happening is going to continue happening. So that's what I expect. Everything on the monthly, on the 10-year treasury is pointing us to the upside, the yields. Now we're looking at the weekly. The weekly was obviously in a powerful trend. It is now down here. We have multiple green histograms in a row. We are below the zero line. We're below the slope line. It is still blue. So we need to be careful here as we are essentially losing momentum to the upside. Oh, you know what? I did not turn on this on the monthly, and I do want to look at that because this is our deep dive. The entire time, obviously, on the way up here, leading up into the 1980s, when we got up to that 15% interest rate, we were on top of the 200 exponential and simple. Here, we'll notice that price action breaks down below the 200 exponential and simple. The responsiveness of the 200 exponential is going to mean that it's now going to be underneath the 200 simple. The 200 simple lags behind, acts as resistance, and then eventually we get rejected and break down, and then we go into a long-term downtrend. We continually, throughout the entire range, retest 200 exponential and simple, retest 200 exponential, retest 200 exponential, retest 200 exponential and simple, retest perfectly 200 exponential and simple. So what is more than likely going to happen? Well, when we break up here eventually, we're going to retest the 200 exponential and simple, because that is the reversion to the mean, which happens constantly throughout markets. This is on a monthly time frame, so it might take a while to happen, but let's look where that lines up. Oh, look, it lines up perfectly with the top of our channel that we've been operating inside of. So once again, confluence to a T, which is exactly what we're looking for because it gives us the highest probability of being correct. So now we basically have the hard buy signal leaving the bearish control zone, a couple green histograms, but there's a lot of bearish overhead pressure because of where we're at right now. So what do I expect to happen? Well, when we come back up here, what's going to happen? We're going to probably see resistance or potentially a rejection at this 1.6 range, which is also going to line up perfectly with the neckline, and that is in fact our 200 exponential moving average. The 200 simple is slightly above it at 1.88. Is it possible we break through that, come up, and then get rejected there? It definitely is. But if we look at our neckline of our bottoming pattern here, we'll notice that once again, that neckline lines up perfectly with the 200 exponential. So we have once again perfect confluence between our indicators, our oscillators, our drawing tool, and literally everything. So all the people that are just making their analysis based on what they think is going to happen, or fundamentals, or macro, or what they want to happen, it's all bullshit. Let's just look at the charts and keep it real. Here we have a very clear picture of what is taking place, what is likely to take place, and what has been taking place. So now when we zoom down here to the daily for our most relevant time frame, well, what does that mean? We're back on top of the 200 exponential on simple. They are sloped to the upside. The 200 exponential has been leveled out here, so the slope is actually flipped over to red. The 8 and 21 have crossed back to the upside, and we're back on top of them. So we're in a situation now where we're probably going to enter into a daily uptrend, followed by a weekly consolidation or downtrend, followed by a macro monthly uptrend. So what does that mean? Well, short term, we're bullish. Midterm, we're neutral to bearish, and long term, we are extremely bullish, back up to like 3%, which is not that freaking big of a deal. So we also have obviously the blue slope line above the zero, multiple green histograms, hard buy signal coming out of the neutral zone. The yields are bullish. Bullish. So what does that mean? Well, let's switch over to our Tlt chart, the 20-year treasury. And keep in mind, that was the 10-year yield. So basically, we're just going to get the opposite picture here. So obviously, going back to, this is only back to 2002, this chart here. But since 2002, we have went absolutely parabolic to the upside. We topped out here, obviously, when everybody got scared and thought the world was going to end, the economy was going to crash, and that was the end of everything. Everyone rushes into the safest place. Where's the safest place to get your money back? Well, treasury yields in the United States. So, or treasury bonds rather. So that drove the price up to the highest level ever at 180, and then obviously after that we've been selling off steady. What happened on that? Well, we got to bounce back up to what amounts to our previous high right here from 2019 before we went parabolic, and then now it looks like we're getting a slight rejection or resistance. It looks like we were trying to cross the 821 on the monthly back to the upside. We are all the way down here bouncing off of the entry into the bearish control zone, trying to save price action. We have all red histograms, now a couple green histograms below the zero line, and the slope is still blue. So what does it look like is happening? Well, it looks like the treasuries are attempting to rally back to the upside on the monthly. Do I think that's going to happen? Probably not. But I did expect us to come up slightly higher to the 0.5 Fibonacci from the top of the zone here to the bottom right here. And now if we zoom out here again and look at our drawing tool, we'll notice there's two things present on this chart right here. Again, I will turn off the moving averages. We have the channel right here in blue that we went parabolic out of the top of, came back down, tried to hold it as support. It failed. We came down perfectly to the heart line. The heart line has acted as resistance and support multiple times throughout this level, and is obviously showing a very key level. Even though we break through it, sometimes we break through it and it acts as support and then eventually fails, or vice versa. We might break through it and then it does not act as support. We might come down to it, acts as a support, and then fails to the downside. But we see a very clear reaction off of that. Well, what happened right here? How did we pick the exact bottom on bonds and the exact top on the treasury yield? Well, it was very easy. Obviously, our indicator oscillators, but also the heart line as well. So when we came back up here and went parabolic for the head, we came back down and put in essentially a neckline correspondence at the same support back here, which lined up perfectly with the heart line of our channel as well. And then we got a reaction rally to the upside. We stopped at the 382 on the monthly and were unable to push above it. Although we did get some wicks on shorter time frames, it is possible still that we come up here slightly higher to the 0.5 at $155 on the 20-year treasury bond. But in all reality, it looks like we are topping, as this is our third month in a row that we've been unable to break through the 382 corresponding Fibonacci level. So what's most likely going to happen if we cannot break through this level? Well, we're going to come back down here to the 236 at roughly $143, and then eventually back to the heart line where we would expect some kind of support, and then a break and measure move to the downside. Where is that break and measure move going to take us to? Well, the measure move would be from the head to the neckline, and then we would just move that over here, and that would basically mean bonds go to zero. So Obviously, that is not possible. So in this case, we can't really use a measured move in the same way we normally would, just because this has gone so parabolic, and these bonds are unlikely to be going down to zero. But if we do look at it, it would take bond prices basically down to like 90. Is it possible they go back to 90? Yes, I think it's very unlikely that they lose 50% of their value, but that could correspond with some sort of like crazy world ending or United States bond default situation. So while it's unlikely, it is possible. I think more likely than not, we would break back down here to essentially this green parabola line, that being obviously clear support throughout this range here, clear support throughout this range here. We did not quite come down to it here in 2014, but then we touch it here again. It gets a little more difficult the longer or further out we go to have a parabola in place, as it can be altered, to the upside or to the downside accordingly. But it looks very likely that that's what we would be looking at. So I'm paying attention to essentially that level at like 130 for potential support. But I think more realistically, I think it would be 116 for like a macro bottom on the 20-year bonds. And then obviously that bottom of that channel also lines up with our 200 exponential and 200 simple moving average. So again, the likelihood of us coming back down here to that level, in my opinion, is extremely, extremely likely based on technical analysis, because we have this very powerful channel. We have also a 200 exponential and simple moving average on the monthly time frame. And then if we just go to a shorter time frame, take a look here at the weekly. I'm going to go ahead and turn off the drawing tools, and we'll see that we basically broke above the 200 exponential and simple, entered into a strong uptrend, came back down, retested 200 simple, retested 200 exponential, retested 200 simple, and then the W pattern broke. We got our move to the upside, across the 821 back to the upside, but now we are failing to maintain that trend. So what's likely to happen now? Well, we break back down and come back down and retest the 200 exponential and simple, potentially put in a higher low, and then bonds go to the moon, assuming that it stays bullish. Now, what we have to pay attention to, though, is here on our Jewel Thief, we have basically left the bullish control zone, and we've gotten the hard sell signal. So the likelihood is that we will, in fact, sell off. We do have multiple green histograms above the zero on the TJD TDMACD, but we have 2 red histograms in a row now while we're above the slope line, and the slope line is blue. It's not unrealistic to think that on the weekly, we are now going to be putting in a weekly or midterm downtrend before potential continuation to the upside. So on the monthly, we basically have a bearish trend with potential relief in the shorter term. On the weekly, we have a bullish trend with potential consolidation or sell-off on the weekly. And then if we go down to our daily, we will notice that we've been in a consolidation or a downward trend. We're back on top of the 200 exponential and attempting to push to the upside, but we're losing momentum, and we're getting a hard sell signal from the top of the range. So again, while it's possible that we have continuation to the upside, the short and medium terms are looking slightly more bearish here. So let's go to our VIX next. We specifically spoke about the VIX and what we expected to happen this week and what we were paying attention to. So obviously, again, let's go to a long time frame. Excuse me. So if we look at our VIX here on the monthly, we will notice that we have basically our bullish area right here, or rejection area. We have our bearish area right here, or potential like accumulation of volatility area right here. And this is just the volatility index of the S&P 500, but it represents overall the stock market and potential of volatility. What does volatility mean? Well, it typically means that we're going to have a violent sell-off, or something like that. So we'll see what happens here. But what we were paying attention to is that obviously those key zones, we only approach them like every so many years. So here in 2005, we approached like the bearish area down here, or like area where we're likely to see a burst to the upside. And then here, in 2008, 3 years later, we reach, the bullish control zone or top of the range. And we have a couple touches along the way, but then essentially just oscillate back down to the bottom and then to the top here with our Rona situation. And now we've been slowly just selling off inside of this channel. So we have a macro channel with clear area in green and red, and then a heart line here. And then if we go down to a shorter time frame, we'll notice that we have basically on the weekly a channel that's forming. It's a descending channel where we've basically been just selling off inside of this range. So what are we paying attention to now? What did we specifically speak about last week and what we were paying attention to going into the close of the week? Well, if the VIX shot up here and did not get rejected, if it closed the end of the week above the 20 range, that to me meant that we were going to have heavy pressure on the stock market. So if we have potential rates looking like they could rise, at least short term, we have the VIX rising and putting stress on the stock market, showing there's likely to be volatility when all we've done is melt up for the last year plus. And then we'll look at the DXY shortly, and that looks like it's getting ready to go parabolic. What does that mean? It means the stock market is probably about to get wrecked. Well, we saw that start happening at the end of last week. So we'll pay attention here and see what happens next. But what I suspect happens is we came down or up to our heart line here of the sideways channel. We came down and broke through the heart line of our descending channel. So each time that has taken place before, it acted as support here, support here, support here. We broke down from it. It acted as resistance, even though we broke above it. Resistance here, even though we broke above it. Resistance here, even though we broke above it. So what we want to pay attention to is when we break up here or get rejected, do we see continuation to the top of the range, resulting in a massive, violent sell-off in the markets? Or do we see another rejection here back down to the bottom of the range? Well, we have to wait and see, obviously, but more than likely what will happen is, more than likely, we will get rejected in this area and come back down. We'll see the melt up continue and everybody, wins. Obviously, stonks go higher, and etc. But this chart right here is telling us that volatility is returning and clued us in that volatility was returning to the markets. And that's why we were able to be prepared for the situation. Now, leaving the bearish control zone, looks like we're about to get the hard buy. We are slowly picking up some kind of momentum here on the TJD, TDMACD, and we're at the heart line. So we're at resistance, picking up momentum, getting a potential hard buy. So does it look like the VIX is headed up here to like 29? Yes. Will it break through that? I really don't think so. Will it even get up above 20? We have to wait and see. But I do not think that we're going to just break through the top of this channel and just go back up to the danger zone. But it is possible. But the most important thing is this 29 level and the 20 level, which we're basically at right now. All right, let's look at oil. So once again, the whole world was betting against oil. Everyone was saying oil's going to jump, blah, 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 blah. Oil came down perfectly, found support at the 200 exponential, has moved back to the upside, has crossed the 821 back to the upside, and looks like it's about to go parabolic. So we have already reached 70, which was our initial target as expected. And then our next target to the upside is going to be like the 74 range. After that, it's going to be back up here at 78. And then obviously you guys know my target on oil is between $80 and $100. Far from its all-time high, but very, very clearly in an uptrend. Well above the 200 exponential, well above the 200 simple, and clearly trending to the upside. So sorry, Kathy, no $3 oil for you. Once again, if we pay attention to what's going on here, and look at the technicals and not, do we just want to bet against, internal combustion engines, bet against the ICE, because we want to pump up Tesla and electric vehicles? It's not in place. There's no infrastructure for people to charge their vehicles. There's nowhere for us to get this energy to charge these vehicles without gasoline, without coal, without oil. There's nothing there. So it's a fucking pipe dream to think that any of this is realistic in the next 20 years. So now when we look at the oil chart, well, what has it been doing? It's been on a downtrend since 2014. Here we attempted to rally and got back above the 200 exponential, but could not rally the 200 simple back here, and then continued to sell off. Oil went down to zero, which is why this chart looks like shit, because we can't actually look at it correctly because of the zero. And then obviously now, what do we see happening for the first time? We see we're above the 200 exponential and the 200 simple, and we're trending to the upside. So that tells us that oil has just entered into a macro uptrend. Now, what we're paying attention to is there is some bearish divergence taking place, and we are below the slope line on the weekly for oil. So do we have to see continuation? Do we have to get this breakout to the upside? No, we do not. But does it look likely right now that we have essentially bottomed out and that this is our neckline or bottom of our like cup and handle or Adam and Eve type, more like an Adam and Eve, bottom? It looks likely to me. If we break through the $77 range, we have the measured move from the bottom of our range to the top of our range, or the neckline, or whatever you want to call it, and that's going to put us roughly at $120. Do I think we get to 120? Probably not. Or if we do, it's probably just on a spike, but $100 is realistic to me. And then if we just zoom out and look at the monthly I think I can turn this back on, go over slightly, and then I will turn the auto back off, and then we can sort of look at this chart once again. Well, what are we seeing happening? Oil has been on top of the 200 exponential and simple and trending to the upside basically, you know, since the 1980s. We peaked back here obviously in 2008, and then since then we retested the 200 exponential and simple, broke down below them, they acted as resistance, and now here we are above the 200 simple, 200 exponential in blue, but we're below the 200 simple. So we're running into some serious resistance at this level. So whatever happens on the macro, on the monthly, over the next few years is likely to last for a while and determine the overall trend of what's going to happen. So fundamentally, eventually, 20 years, 30 years, 50 years, 100 years from now, I think oil will probably never reach all-time highs again. But what happens in the next couple months or a couple years? Well, that's anyone's guess. And technically, based on everything we've looked at, it looks more likely than not that we're headed up. We're in the bullish control zone. We are seeing a little bit of weakness in the momentum here, but we're well above the slope line and multiple green histograms in a row well above the zero line. At resistance right now, with momentum in our favor, with strength in our favor, but we're at basically the top of the range. So the real question is, can we break through this resistance? If we do, we likely see a parabolic uptrend to at least retest $100 or potentially $120. But in my opinion, we just put in another lower high. Now, is it possible that this sells off and this is done and we're topping out right here based on this resistance? It 100% is possible that oil has topped out for this cycle and potentially forever, and we'll never see these levels again. It is 100% possible. We have a very clear top back here in 2008, all-time high. We have very clear resistance right here in 2014 where we topped out, and that allows us to put this trend line in place, at which point in time we were unable to reach it here again in 2018, and now here we are bumping our head on it now. The longer we consolidate at this range and the more times we hit our head on the ceiling, the more likely our head is to bust through this drywall. So imagine we have low ceilings and we're jumping on our bed and we keep jumping and hitting our head on the ceiling over and over and over again. Eventually, if we keep hitting our head on that drywall, we're going to break through and shoot to the upside. Now, will we take out the all-time high? Probably not. But will that put us up near 100, 120? Could that have something to do with OPEC? Could it have to do with decreased production because, you know, oil rigs are getting blown up, or, you know, there's crazy stuff going on in the Middle East, whatever? Sure, probably could. But will we have seen it coming in this chart right here ahead of time if it happens? Yes. And if we start to sell off right here, I will gladly change my mind, at which point in time my target for oil to the downside the initial target will be like $60 again. But then after that, I think $40 is going to be a hard floor, at least for the next 2 years, 5 years, 10 years, even 20 years, because there's just no infrastructure in the world to use something other than oil. And anyone that says that oil is just going to go away or it's going to go to zero or whatever, they have another agenda. Cathie Wood's whole agenda is based on oil dying so electric vehicles and innovation and technology can take over the world. But there's nothing in place. There is no infrastructure. There's nothing to replace oil. The same way that the dollar just can't go away tomorrow because there's nothing to replace the dollar, the macro trend can be dollar goes away. But in the meantime, there's nothing in place to take over. So it's not going to happen. It's not going to happen in 1 year. It's not going to happen in 3 years, maybe in 5, probably in 10, definitely in 20, 100% likelihood in 100 years from now, the dollar is gone. But to say that it's about to be gone in 1 year or 3 years or 5 years is it's a joke. It's a joke. And the same of saying that oil is going to be at a regular price and new price of $3 to $12 per barrel in the next 1 year or 3 years or 5 years, all it does is it takes away all of Cathie Wood's credibility and legitimately just makes her, you know, a bum. She's just basically trying to push her agenda, basically fueling off of all the FOMO into her fund. So you guys know how I feel about that situation. It's not realistic. It's not reliable. You can't trust anyone that is literally just pitching their agenda. And it makes no sense. There's no infrastructure in place. And everything that the world does, everything that governments do, especially building infrastructure and converting over from something that has been in place for hundreds of years, and there's no legitimate technology that's going to just dethrone it tomorrow and then all of a sudden be built in operation and ready to go. Now, if cold fusion is discovered tomorrow, sure, I will admit that I'm wrong and cold fusion will take over the world in 3 years or 5 years or whatever, and I will be wrong and oil will be gone, and I will gladly admit it to you guys. But it's not going to fucking happen. It takes so long to get permits for any gigantic wind turbines or water dams or nuclear power plants. And then after you get the permits, after years and years and years, then you have to fucking build them. So then you build it, and that takes 3 years, 5 years, 10 years. And then after that, you have to actually get a supply chain for whatever it is that you need to maintain those things, or where you're going to get your uranium for your nuclear power plant, or whatever the situation is, all that stuff. And then on top of that, you're going to need all the energy to build and make all the steel that's going to build and make all the equipment that's going to build and make all of the factories that's going to, basically maintain all these energy things in the future. And the truth is, solar and wind turbines don't even have a positive effect. It's a net negative on the carbon footprint because it costs so much carbon and there's so much of a footprint for them to actually make the steel, to build the turbine, to put the turbine in place, and then worry about the upkeep on the turbine, and they only last for 20 years and then they have to put new ones up. And there's all this other stuff that goes into play that makes it basically like non-feasible. Solar energy, they've been pitching solar energy for like 30 years that it's going to take over and it's going to be great and all that stuff. Anybody that's ever actually had solar panels and dealt with them and the upkeep and the cost of them and the actual raw materials and minerals that come out of the ground, the copper they have to mine, the silver they have to mine, when it's all said and done, they have a net negative effect. And most of the time, honestly, they don't even pay for themselves in the 20 or 30 years that they last for. So you basically make a 20 or 30 year investment and then at the end you break even. Wow, that's great. And it's good for the environment? No, because it has a net negative carbon footprint. So let's calm down about all this technology and innovation and changing the world until it's actually in place. Do I think eventually this stuff will take over? Yes, but let's use our brains in the meantime. They're not going to have solar panels on every house in 3 years or 5 years. They're not going to have every internal combustion engine off of the roads in the next 15 years because they've had electric vehicles that all got recalled this year because the batteries were malfunctioning and exploding because we don't even have like the minerals and stuff that goes into making these batteries. We need a shitload of lithium. We need a bunch of nickel. We need all this silver. We need the copper. We need all. So all of a sudden, we're just going to magically increase all of our production on all these things, or the price on them is just going to go parabolic, but somehow these vehicles are going to be affordable? No, it's unrealistic. I mean, it's just a bunch of empty promises and pipe dreams. Like, let's calm down and realize this stuff is coming eventually, and you can get ahead of the boat. But if you're 10 years early, you're still late. If you bought after the price already moved up, and then it goes down for 5 years before it goes up infinitely. So let's just relax here a little bit. Everybody's getting like all hyped up thinking this is the future and innovation and all this stuff. You're buying into a fucking narrative that doesn't even make sense. And when you sit down and just think about it for a minute, it's bullshit. It's clearly bullshit. Now, do I think eventually EV and renewable energy and, decreased carbon footprint and carbon credits and all this stuff is going to be great and it's going to be the way of the future? Sure. But it's like talking about Bitcoin citadels. Like, shut the fuck up. You sound stupid. Okay, so Dow Jones. Let's look at the Dow. Well, exactly what we said happened. We broke down from that key support line, that key blue support that we've been holding on to for the entire year. We got the cross now between the 8 and 21. We had the cross down here and found support at that blue line. We had the cross down here and found support at that blue line. And then previously before that was the 2 times when we retested the 200 exponential and simple after the big crash. So we need to be very careful right here. The very key area that we were paying attention to in green, our support line here, the resistance, resistance, resistance. We broke through it. It did not act as support. We broke through it again. It did act as support, did act as support, and now it has failed. Does that mean we cannot just gap back up right here and then continue to the upside? Not at all. Not at all. But if we maintain below this and see continued selling taking place, there's no buyers right now in this market. There's no buyers. The only reason these markets have been floating up as long as they have is because there was less sellers. So there was non-existent amount of sellers because we're at blue sky breakout all-time highs nonstop for the last year. And then all this automated money that just flows into these indexes automatically because people just have it taken out of their paychecks. It's in their pension plans. It's in their 401ks. It's in their investment portfolios. This money just flows in automatically. So it's all of a sudden we have more selling coming in. It's going to trigger these algorithms and we're going to see a massive sell-off. Does it have to happen? No. Is this the beginning of it? Maybe. No one knows. We just do not know right now. But fundamentally, we've been paying attention to this as United States socialism was basically cut off. You still get money for laying on your back. You could still get money for a couple things, your food stamps, your welfare. But the old adage of the pandemic unemployment and the sit at home because you're afraid of your kids going to school and you don't have a babysitter, or you lost your job and you can't find a job even though there's 11 million open jobs and there's only like 180 million people that work in the United States. All that bullshit is gone. So all this shit is about to change, and this potentially gives us a macro top. If all of a sudden people have to go back to work and they can't be traders anymore, or they have to go back to work and they can't get free money from the government anymore, that's going to put a shitload of pressure on all this stuff. So we're going to have to see what happens with Fed policy. But we already know the Fed's backed into a corner because rates are still at zero. They're still buying the same amount of treasuries and mortgage-backed securities as when the pandemic started. The world crashed and went into like a hellish death spiral, and what we were doing at the beginning of the death spiral, we're still doing a year and a half later after we're at all-time highs for month after month after month. So what the hell are they going to do now? They're going to come in and start buying $250,000 of mortgage-backed securities and bonds every month. They're going to lower rates from, 0.5% or from 0 to negative. No, they can't do any of this stuff. It's not realistic to think that they can do it. And then on top of that, we have a giant political tension going on inside of our country. And the Fed has to specifically, they have a mandate that they cannot do political stuff. So they basically have to sit on their hands right now and wait for all this infrastructure and debt ceiling and all this stuff to get taken care of, because they can't just come in and do whatever they want. They have to stay out of this for right now. So again, the Fed is in the corner. They're crying. They've painted themselves in the corner. They have no tools left. And in the words of Peter Schiff, the Fed has a headache and a handgun. Are they going to use their handgun to cure their headache? No, they're not. They're just going to sit there and they're going to keep talking and say, if you get any closer, I'll kill myself. I'll do it. I'll end my headache. But they can't do anything. Their hands are tied behind the back. They're painted into a corner, and there's nothing the Federal Reserve can do but run its mouth. There's nothing they can do. So we're looking at this level right here for the breakdown in red for the Dow Jones as our initial target if we continue to sell off right around, that 3350 mark. If we break down below that, which I don't think we will, I think that will act as a hard support on our 200 exponential and simple, basically at least temporarily to come back and put in potentially a lower high, find resistance here at the 35,000 range, etc. We'll have to wait and see how that plays out. But does this look like it's potentially topping out? Yes, it really, really does. But after that, we have a very clear support down here at 31.5. I think it takes a while before we get there. If we do start to see that, what we're going to look for is basically this support line right here where it crosses with the purple. So I think realistically, we would see that act as support all the way until the end of December 2021. So I think honestly, it's realistic to think that we could potentially be bouncing at the connection of these two lines at the end of the year. Will that happen? Probably not. We'll probably just keep floating to the upside. But there's definitely a possibility, and there's some confluence that's worth paying attention to. Now, if we switch over to our weekly here, we will see what we've been talking about for a while playing out finally. We had expected this to take a while. It's on a weekly chart, and of course that's what's taking place here. We have broken down from the 8. We're at the 21. We expect that to act as support. But if we look at our indicator oscillators, we had essentially a high back here. We have the same high or slightly lower high here, and now here we have once again a lower high. So what is that? A high, a lower high, a lower high. Now let's look at price action. If we go here, we have a high, we have a higher high, we have a third higher high. That is triple bearish divergence on the Dow Jones Industrial Average. Here, if we look on the TJD TDMACD, we do not have triple bearish divergence. We have double, though, from the high right here. And then we have a very clear lower peak here with our single week green positive histogram after literally, 12 weeks plus of red histograms. So what does that tell us? It tells us we're in a bullish melt up, and this is unsustainable. So now that we have 3 drives of bearish divergence and we're starting to break down from key support, what is the likelihood that this will actually play out to the downside? Small, because it's in the best interest of the elites, of, you know, the Federal Reserve, of politicians to stop this from crashing. But we know for a fact that that's not always what happens, because we just had a crash right here that we predicted ahead of time based on very similar situations taking place. So let's leave some credibility here for what could potentially happen in these markets and understand that we are in the danger zone. And now if we go over here to the monthly, we see now our first red histogram on the monthly since back here in September 2020 when we had 2 big red months on the Dow Jones. Okay, so pay attention. We still got, you know, the better part of the month, half the month over, you know, left. So does that mean we're just going to break down here? Are we probably just going to find support here, you know, around December at 32,000? Probably. But it's worth paying attention to, because the last time we got the hard sell signal and left the bullish control zone, that was our capitulation dump back here. So if we do a similar situation right here, and this is already starting to roll over, and we come down here and start seeing a couple months worth of weakness, maybe we're looking at, you know, another capitulation event like this. And the most important thing to pay attention to is our initial capitulation event right here was back in 2018, February. We sold off for a couple months, came back up, put in a higher high, and then we sold off to a lower low after that, after putting in multiple drives of bearish divergence on the monthly. Then we came up once again to a higher high, and then we sold off in that Rona dump once again to a lower low. So we have a giant megaphone pattern taking place. And then we came up here to a new higher high. So if we start to break down from these levels, there is a high likelihood that we actually go lower. And that's going to correspond with a legitimate crash in the stock market of epic scale. Do I expect that to happen? No. Is it possible though? Yes, 100% is possible and has a decent probability of happening. If that happens, which I don't expect it will, and I don't think it's likely that it will, our initial massive downside target on the Dow Jones is 40%. Do I think it gets there? No. But after that, back down to the bottom of the range would put us over a 50% dump on the Dow Jones. Well, that'll never happen, blah, 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 blah. Well, let's look at the past and look at the last 100 years. We have a situation like this. We're operating inside a channel. We go parabolic and then we dump. How much did the Dow Jones dump during the, you know, Great Depression? It went down 90%. 90%. I'm going to say it one more time. 90%. Okay? And then we have our top back here in 2000. Initial sell-off was 38%. No, that's not possible. It'll never happen. We're not in a bubble. Everything is normal. After that, we have our 2008, mortgage crisis situation, 54%. So is it unrealistic to think now 2000, 2008, 2021, is it possible that we get once again another one of those type capitulation events of 50% or potentially as high as something ridiculous like 82% back down to the bottom of the channel? Well, I don't think it's likely, but it's possible. So, you know, that's what people are talking about when they're talking about a capitulation dump event. Again, I do not think it's likely. I think they will do anything and everything in their power to stop that from happening, because it will essentially crash everything, the entire economy. But how do you know that that's not their long-term objective? Like, I'm not into conspiracy theories or anything, but, you know, when you run out of tools and the people are starting to, like, you know, rise up against your new policies and your socialism or, you know, your inclusiveness or your, you know, all these new terms that they're using or whatever. And then the people rise up and say, you know what? No, fuck you. How do you get them to go along with what you want? You convince them that it's what they want, and you get them to beg you for it. So if we go into a depression and everything's crumbling down and infrastructure's going to shit and you can't get food and it's expensive to get everything and everyone's losing their jobs and the whole system's crashing and all these pensions are unfunded and Social Security's collapsing, the people will be begging the government to take over and give them everything and do anything for them, anything possible. And that's how they gain absolute power. So you want to talk about the Great Reset? You want to talk about how it happens? You want to talk about conspiracy theories, whatever? Well, that's how you get there. You crash the entire stock market 50 to 100%, 90%, whatever, and it doesn't bounce back. You go into a Great Depression for 2, 3, 5 years. people will be begging. They will be begging for handouts. They will be giving away any bit of privacy of anything they have left just to get a hot meal. So anyway, S&P 500 breaking down from the 821. We specifically talked about this area right here as our support. We broke down from the blue support line after retesting it and putting in a new all-time high. I expect us now to find support at our yellow support line here. We could go slightly lower, but we have broken down from the key area right here at 447 or 4,470. We were slightly shy of my target. I did say 4,600 S&P by end of year. We basically made it to 45.30 or 453, depending if you're looking at the SPY or whatever. Does not mean we don't still see a new all-time high before the end of the year. But each time this has happened, hard sell signal, sell off back down to the yellow support line, hard sell signal, sell off back down to the yellow support line, hard sell signal, sell off back down to the yellow support line, hard signal, sell off. I mean, come on, guys. This is clockwork. It literally does what we tell it to. The markets are literally our bitch. So I think we're probably just going to keep smacking our bitch up, so to speak. If we look at the weekly S&P, once again, it's pretty crazy with all these drawing tools here, but we'll see we basically went absolutely parabolic since 2009. We have been operating inside of this green channel since 2009. When we crashed down here, we slightly broke out of the bottom of the channel and the 200 exponential and simple moving averages. We are now at the top of the channel. We have a tiny bit of the way to go. I do not know if we're going to get there or not. It looks less likely if we continue to sell off. It looks highly likely if we continue to go up, but that's obvious. We're very clearly losing strength here on the weekly. We are very clearly at maxed out zones here on the weekly where it looks like we're about to cross back to the downside. Does that mean we have sell off? No. When we look at our monthly though, we will see now we still have monthly all green histograms, but this tells me that we are done. This is the very top of the range. We are at 98 on our stochastics. We previously topped out here at 97. We previously topped out here at 96. We topped out way back here at 95. We topped out way back here at 95. And previously in 1995, we topped out back here at 96.74. So we are literally at an all-time high on our stochastics at 98. So what happened those previous times? Well, we reached the top of the range here. We had a violent sell-off, and then we floated up higher, and then we had a violent sell-off, basically losing. And again, I'm not saying this has to happen right away, but we lost 50% of our value. The next time we topped out our stochastics in this range, we sold off, and we lost 56% of our value. And then obviously, everyone knows I called this dump here perfectly, and it wasn't even that big of a dump. Lost about 40%, 36% of our value. And now we are the furthest we have ever been away from the 200 exponential and simple. People are saying, yeah, but the market will go higher before it sells off. It's going to go parabolic. We'll have a blow off top. What the fuck is this? Is this not a blow off top? Is this not parabolic? If we were going any higher, any faster, it would look like a straight line off of the page. This is parabolic. If we start to sell off from this level, I think that the massive target to the downside is going to be 323, which was our pre-pandemic highs. If we break down from those levels, we could retest the 200 exponential and simple. Again, this is a society-ending event that no one should be hoping, wishing, or praying for, because it's going to mean that you're pimping out your kids on the street and you're begging for money. This is not what you want. So no one should be begging for this. No one should be hoping for a Great Depression, because the suicides at all-time highs, poverty deaths at all-time highs. So if you're some hodler of gold or whatever and you think that this is the best case scenario, this is the worst case scenario, and no one should be hoping for this. 56% would take us down to the 200 exponential and simple. That is literally the worst case scenario that we ever want to see as a, civilized world. And that's in the USA. It's going to be a lot worse for other countries, third world countries, other countries that don't print their own money. it's going to be terrible for. So do not wish or hope or expect anything like that. That should be the worst case scenario. That should be the situation you buy insurance for, not that you want. So if you're buying gold, it should be your insurance policy. And what is the goal of an insurance policy? No one buys insurance on their car and then goes out expecting to crash your car. You buy insurance in case the worst case scenario happens. That is why we buy gold and silver. That is why you buy these things. It's a hedge against collapse. But the last thing you do, you don't go out and then pray to crash your car because you have insurance. It's the other way around. So for all the gold hodlers and all the, no offense, Peter Schiff of the world, just stop. Stop. You don't buy fire insurance on your house and then try to burn it down. That's what it is. If you're all in on gold or you're all in on silver for the silver squeeze, that's like saying I'm going to spend all my money on life insurance and then hope I die. Sure. That's a great plan. Good job, guys. Good job. IXIC, Nasdaq, we have obviously broken out of the ascending triangle. We've got the majority of our measured move to the upside. Still potential continuation up to 16,000 and then our final target up here at 18,600. It's looking less and less likely. We have obviously daily bearish divergence. We're seeing some weakness here as we have broken down from the 8. We're finding support at the 21. Next support to the downside, 14,877. If we do break down further than that, I would expect these previous lows to act as support. We really do not want to break down below 14,332. If we come all the way back down to our entry at the 200 exponential and simple, 13,700. But the Nasdaq is starting to show some weakness as we have some very clear bearish divergence taking place between our top back here in January and our top now. Still in the bullish control zone. We have once again bearish divergence taking place on the TJD, TDMACD as well. Only 2 drives here. But this also went into a long consolidation pattern and sold off quite a bit while everything else was catching up. We are now seeing our first red histogram on the monthly. And again, we are at like monthly highs, not record highs though. But the previous couple times when we topped out here, had a sell-off, floated new high, and then massive sell-off. We topped out here, floated slightly higher, and then massive sell-off. Same thing back here. Again, this is, if we have an actual collapse, it's going to look like this. But remember what the world looked like when this happened. 2 months down and 32%, and everyone thought the world was ending. So what's it going to look like if we get something like this? 78%. That was a 2000 pop, bubble pop. If you weren't around for that, it sucked. 80%. So if you had $1 in the stock market the next day, well, not next day, but by the time this was done, you had 20 cents in the stock market. And remember, this was from the end of, March 2000, and it didn't bottom out until May of 03. So this is 3 years of pain. We do not want that. We don't want that. Maybe you do. I don't know. Maybe you're a masochist, but it's not good. So all the people that are calling for this, that, and the other, just pray it doesn't happen. Because that's literally like worst case scenario for everyone. No matter what country you live in, it's going to be particularly bad the poorer your country is or less self-sufficient. The Russell 2000, and let's talk about emerging markets. Okay. If there's a big collapse coming, what do you think is going to say more stable? Emerging markets that are unstable now or the United States? Probably the United States. Probably first world countries over third world or fifth world countries. So, maybe not the best idea to be putting all your money in some crazy place like China or India right now. No offense to those people. There's nothing wrong with them. But when people get scared, when there's instability in the world, people run to United States because they're less likely to default on their treasury bonds or something like that because they print their own money. So is the United States more likely to default and say, look, we can't pay you, sorry, you're screwed? Or are they more likely to go into hyperinflation and just print away the value of the money but still pay you back to quote unquote remain, credibility? Well, I think probably not going to go into a banana republic, but it's possible. But if I had to pick between those two scenarios and what's more likely to happen, well, if you default on somebody and tell them I'm not going to pay you anymore, that's like, okay, we're going to war. And you say, yeah, but United States got the most guns and the tanks and the bombs. Who cares? Nobody wants a war. You know, we all have nukes. That's bad. But if you just default and print away your debt, you default, you fuck everybody over, but you kind of like, you're like, I'm fucking you over, wink, or I'm not fucking you over, wink, even though you really did. But if you literally just say, hey, I'm not going to pay you anymore, go fuck yourself, that's way worse than just being like, yeah, I got your money, here it is. And you're like running the printer in the back and then just passing somebody fake dollar bills. I mean, think about that. So here's the Russell, obviously did exactly what we said, got back above the heart line, topped out here once again at a lower high, broke back down to the heart line, and now we're about to get the hard sell signal. We have left the bullish control zone. We have multiple red histograms in a row. 821 are getting ready to cross to the downside. And again, the Russell is a total piece of shit. It's barely above the 200 simple moving average and 200 exponential moving average. What's most likely going to happen right here? Well, we're probably going to keep selling off to the downside and find support here at the 200 exponential moving average. The same place we have found support 1, 2, 3, 4, 5, and then been inside this channel for literally the entire year. So probably going to happen. If and when we do break down or up from this channel, which we're probably not going to do because we've been inside this channel for a year and we haven't broken it, why would we break it this time? We won't. But if we do, 1,912 is also the 236 of the macro Fibonacci from the low back here in the crash to the high right here. And that would be a 23.6% retracement of the entire move to the upside. And then also the measure move of the channel breakdown. This is what the Russell has been warning us about for month after month after month. We have literally gotten all red weeks with a couple little pokes of green. We are below the slope line, hard sell signal. Stokes have been trending to the downside. We are still way above the 382. If we come back down to the 382 and the 200 exponential and simple on the weekly, we're talking about 17,000. Do I think we'll get there? No. Is it possible? Yes. This is the Russell, the canary in the coal mine. Small businesses inside of, you know, the U.S. stock market. 1 month, 2 month, 3 months of red histograms while just going sideways to down at the top of the range. This looks like distribution. This is smart money. This is whales. This is Federal Reserve Chairman. I don't know if you've heard about that recently. This is them dumping millions and hundreds of millions of dollars on stupid ass retail traders. This is what you do at the top of a market. Go read back to the 1920s. You had poor people, shoe shining, taxi cab drivers, you had celebrities, you had women, you had minorities, you had young people, all getting pulled into the stock market and pushed into the stock market and all buying while the thing just went absolutely parabolic and everybody's going to be rich. And then what happened right afterwards? It completely dumps and dies and they all get wiped out, and then the smart and the elites and the rich come in and they take up all your stuff at a fraction of the price, and then they own everything. So what does it feel like's been happening for the last few years when all of a sudden there's, you know, zero cost to enter a trade, no commissions on your trades. Everybody can just download an app off the App Store and it's free and you can trade for free and you get free money to put into it, and everything does is go up. And now all of a sudden everybody on TikTok and all these young people and millennials are in the market and everything's going up and it's parabolic and it's women are in it and kids are in it and, you know, minorities are in it, and finally all these people are, you know, millennials are finally in the stock market. Hooray, hooray, everything's going to be good now. Or it's literally the same playbook from 100 years ago, but nobody reads any books. So probably that's what's going to happen. So TikTok is literally what you hear in the background because the timer's getting ready to go to zero before all this shit crashes and you lose everything. But that's fine. That's cool. I mean, do I think that's going to happen though? No, we'll probably just go parabolic forever. Probably just go parabolic forever. XLB, let's do our sectors here. So we have our material sector. You know, basically topped out, selling off, cross 821 to the downside. Target on XLB is going to be 79. Looks weak. XLC, finding support at the 21 for now. Slightly stronger. Hard sell signal, multiple red histograms. Where would a breakdown take us to? Well, we're at support right now. I think we probably bounce the communications right around here. Next target would be around 81 bucks. 200's way, way below us. XLY, consumer discretionary, we're still just operating inside this channel. We topped out perfectly, or this wedge, topped out perfectly once again at the top of the wedge. I think that this area is going to hold 180. We'll probably go like sideways to down. Still looks decent. It's showing some weakness, but really just because everything is. XLE, energy, absolutely total horrible chart. By far the worst chart. Literally one of the few things in existence, one of the few sectors in existence that did not put in new all-time highs during this cycle. Barely even got back above the initial pushback up in June of 2020. Absolutely pathetic. Pathetic. The worst place you could put your money. And people are saying, energy, I'm bullish energy. Energy is the future. Sure, energy is the future. Again, in like 20 years. Calm down. This is trash. This is garbage. We are literally at the 200 exponential and simple, getting ready to break down. They're losing their slope line. This is absolute trash. We are starting to put in some bullish divergence on the daily though. So I think we push down here. We take out this low right here on the daily at 45.30. We close there. 3 drives of bullish divergence, and then we get a push back to the upside. But it's probably going to underperform because energy is trash. XLF, financial sector, looks terrible. 821 crossing to the downside right here. Still have our same target in play. Still expecting a retest of a 200 exponential and simple. Still have every possible headwind in existence against financial sector. What do I mean by that? Well, if a Fed coin comes out, banks are fucked because they make their money by loaning money to people, and they're the middleman between the Fed and, the consumer or whatever. So that's bad. Interest rates are extremely low. That's bad. If interest rates go back up, if they start to rise, by all means, financials will probably be at new highs. Other headwinds, PayPal, Square, crypto, all these other things are headwinds against financial. Financial literally has everything going against it. So do we get down here to like 34.50? Probably. And at that point in time, we'll have to pay attention because this is really going to look like a double top. XLI, industrial sector, we're at our target now. I've been talking about this literally for months. This has just been going sideways. We're inside of this giant yellow channel. We're now at the heart line of the small sideways channel that we're inside of, and then also the green ascending channel. Are we topping out here? Possibly. We're closer to the top than we are to the bottom. I know that much because we're also inside of a giant channel going back to 2009. We've been going in the top of the channel since 2009, bouncing the heart line, and then eventually we broke down from it to the bottom of the channel in our capitulation dump. So now we've been doing the same thing inside of this ascending channel since our capitulation dump, and now here we are at the heart line here. So if we break down from this level, where do I expect us to find support? Well, at the heart line of the macro channel, and then also the bottom support of our ascending channel inside the channel, which would give us a support of like $90. But what do I know? I just use technical analysis. I didn't even use any fundamentals. And I didn't even pray about where the price is going to go. I'm just using charts, so it's probably not reliable. XLK, technology, the old tech nasty, at all-time highs, probably the strongest or one of the strongest sectors. Big, thick red candle. It's been looking like crap for weeks. We're now below the 21. We're getting the hard sell signal. Initial support probably around 151, 200. It's going to be tough to get down below this level here at 143, but we do have the 200 exponential and simple. I think probably if we see continued sell off in any of these markets for any experience, any amount of time off of like our bearish divergence, I think probably 145 is a buy zone. But I don't even know if we'll get there. It's all about algos and just propping up these markets. So we might literally tomorrow markets might open or futures might open and everything is up 5%. So let's not get too bearish here just yet. But when the bearishness comes, it's going to literally end people's existences on this earth. So again, shouldn't be hoping for it. XLP, consumer staples, double topping right here, looking weak. Probably going to come back down here at 200 exponential and simple. Support around like $68. Looks pretty likely. Are we going to get there or when are we going to get there? Could take a little while, but could take a little while, but we'll see what happens. That's our target. Paying attention to consumer staples, real estate, XLRE obviously broke above the 1.236, but couldn't hold it as support. Now below the 8 and 21. This looks bad now. Is the real estate market topping out? Can we save this? We got to wait and see, but if you come back down here like 200 exponential and simple, that's bad. This area really should have held. And honestly, real estate market is total trash. Could it potentially come back down here like $42? Yeah, probably. People are like, oh, but real estate, it won't matter if they crash because people have plenty of money in their homes and home values are up, so they can just sell their homes. Well, apparently people don't understand the difference between supply and demand. There's no supply on the market and there's lots of demand because interest rates are super low. So the home prices go up. So then everybody's in profit on their new homes that they bought at elevated prices. But then if the rates go up, that kills demand because less people will be able to get money, or it'll cost more money, like in interest, to borrow that money. Therefore, you need to get a better price. So that drives prices down. And also, with the interest rates driving prices down, also demand will drive prices down. So then if all of a sudden everybody says, oh shit, house prices are going down, well, I better just sell while I'm ahead. So then all of a sudden more inventory comes onto the market. So now everybody's trying to sell because they want to get out while they're still ahead. And then next thing you know, there's no buyers because the market's crashing and there's no cheap money, and there's no buyers because the market's crashing, and there's more houses coming onto the market, and it's more expensive to borrow money. All these things are headwinds, and then the prices go, and then all of a sudden, now the prices are down back to where they were before, or anybody that bought in the last 2 years is upside down on their price now. So now, multiple years from now, after the crash, after a downtrend for a steady amount of time, and people are just bleeding out, and we're in a bear market, then people aren't up anymore. Then there's no buyers. They were trying to sell. They keep discounting the price. Now they're upside down. And the next thing you know, they're defaulting. That's how this happens. So for all the people that say, oh, mortgage crisis can't happen, it's not going to happen like it did back then because people aren't upside down. They made money on their houses. Well, you haven't made money until you sold. So let's calm down. Just because Zillow told you your house is worth this much, just because a bank gave you a loan for a house that was this much, does not mean it is. And I'm going to tell you right now, when that turn happens, when the peak happens and we start turning to the downside, you think banks are going to loan anybody money to buy these houses at ridiculous prices? Hell no. XTN, transportation, the old canary in the coal mine, top back out in May, and it looks like it's trying to put in a lower high right now. Barely hang on to 200 exponential and simple. We've been bearish on this since the breakdown from our ascending channel. Once we broke down from the ascending channel, we got a little bit of a sell-off right here. Expect continuation back to retest the all-time high before the crash back here at $65. If we have an initial step down to the 236, I will probably take this entry right here for a push back up to find support on the 200 exponential and simple, or resistance rather. But we'll wait and see. Jets looks like crap. Obviously, just like we told you, below the 200 exponential and simple, they're rolling over. 200 exponential is already red and curled to the downside. 200 simple is flat and about to roll over to the downside. This is what a failed rally, a top out looks like. Jets could not even get up to its previous all-time high from back in 2019, and it will never get to those highs again because airplane travel is dead. It will not go away, but these companies are literally bleeding millions and hundreds of millions and billions of dollars. They have literally gotten 3 or 4 rounds of direct injections from the United States. There are less flights. There are less terminals. There are less people flying. There is almost no business flight. They will never come back. International travel is down and will be down for years to come if it ever recovers. Hail. This one's got our rental cars in it, slightly better looking, but it has now officially broken down from the 200 simple. It is now below the 200 exponential. And remember the signature we always look for, 200 exponential above the 200 simple, bullish, 200 simple crosses above the 200 exponential. That is the top. That is a bear market. That is a wreck city up in this bitch waiting to happen. So that is what I expect to happen and have been expecting. UPS had a capitulation candle, came back up to retest the breakdown. What's going to happen next? Well, we're probably going to come down here at 200 exponential and simple. Still continuation to the downside. Looks like crap. FedEx looks even worse. Broke down below 200 exponential and simple. They have rolled over. And look, there's our signature again. 200 exponential above, 200 simple crosses above. We top out, we break down, and now the slope to the downside. Do we get down here to 182? Do we get down here to 110 on FedEx? Well, probably not anytime soon, but eventually I would bet on it. Let me jump over here and grab a quick little drink and we'll keep rolling. Boy, you guys are quiet in the chat today. All right, let's take a look at the DXY, the dollar. If you're just tuning in, or welcome back to the channel, just a reminder, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Let's look at the dollar. Once again, the dollar is beating the shit out of all the bears. Everybody that's running their mouth about the dollar and how it's going to zero and the fundamentals and they're printing money and it's hyperinflation. Well, they're all idiots. They're all morons. They have literally been tricked by the media, by the Federal Reserve, by the government. The bailout, the biggest bailout, the biggest trick of all time was convincing the world that hyperinflation was coming, convincing everyone that hyperinflation was coming. So what did they do? They rushed out. They spent their dollars as quickly as they could. They bought anything in sight. They pushed prices up to the moon. They overpaid for everything from stocks to houses to collectible cards to used cars. They bought literally anything and everything they could. And what was the bailout? Well, the dumbass plebs that believed the dollar was going to zero were the bailout. They spent all their money. They have no reserves left. And now everything will be crashing. All the assets will be dumping in prices, losing 10, 20, 50% of their value. And there will be no buyers because everyone will just be trying to sell all the dumb shit that they bought at ridiculous prices while the dollar goes parabolic. And that's not just dumb people in the United States. That's dumb people all over the world because there are literally hundreds of trillions of dollars of dollar-denominated debt. And when the dollar starts to break out to the upside and go parabolic, everyone is going to be rushing to the dollar. It will be the biggest short squeeze of all time, but none of the AMC traders, none of the game stonkers, none of the silverbacks, none of the whatever, insert other stupid ass name here, will be able to do anything about it because the biggest short squeeze ever will be in the dollar. And think about this. What's the best way to short the dollar if you live in the United States, or even if you don't? You buy real estate, right? You buy real estate because you're going to borrow for 30 years at a super low percentage rate, and then the dollar's going to inflate for the next 30 years at 5% or whatever percent you magically believe, 10% per year, and then you're going to pay it back with dollars that are worth way less money. So if you borrowed $1 million now and we inflate the dollar at roughly, let's say 10% per year, if you're going to say inflation's 10% or whatever. So if it's 10% per year, by the time 30 years is up and you compound that 30 years, I mean, what are you paying back? You're paying back the $1 million with the equivalence of like $100,000 worth of value. So the person you borrowed the money from is getting completely screwed because you give them back the $1 million in 30 years, but in 30 years, $1 million will buy you like, a decent Lambo, maybe a Ferrari, maybe like, a 1-bedroom apartment. So shorting the dollar is longing real estate. So longing the dollar is shorting real estate, essentially. So if all these people are convinced there's going to be macro inflation and hyperinflation and the U.S. is going to zero and the dollar is going to zero, and borrow up as much as you can so you can buy Bitcoin like Michael Saylor and buy as many houses as you can, and it doesn't matter what you're paying for them because that's cash flow. Sure, if you're right, you just doubled down and you got them. You beat the system and you're so smart. But if you're wrong, if we go into a macro deflationary environment or a Great Depression, what happens then? And rates start to go up and values start to go down, and you're paying on this for 30 years and you lose your job, or you don't have income, or the value goes down and now you're upside down in your house and dollars are in high demand, so nobody wants to buy your stuff. They only want to sell you stuff. Well, you just doubled down betting against the dollar, and the dollar punched you in the mouth and knocked out all your teeth. And that's what's about to happen, because literally for the first time ever, everybody's on the wrong side of this trade. And only now, after months of me being right and proving this was a double bottom, are people talking about it now. And now here we are with a clear head and shoulders, a clear Adam and Eve bottom, a clear double bottom right now, about to break out to the upside, flipping the 200 exponential and simple over to the upside on top of them, getting ready to go absolutely parabolic. And only now are people starting to realize, after they have already went out and spent all their money, after they have already bought all these houses, taken out all these loans, bought all these assets, only now do they realize that they are fucked. They are bent over, their pants are around their ankles, and Bubba's right behind them, breathing heavy, and it's not looking good. So here we got DXY on the monthly, For the first time in existence since the 1980s, the dollar has gotten above the 200 exponential and simple and turned both of them to the upside. We are above the 8 EMA and we're about to push up to the 21 EMA. We are in the bearish control zone. We have left the bearish control zone. We have a hard buy signal. We have multiple green histograms and are approaching the zero line and the red slope line. We are literally getting ready to go into a macro bullish uptrend for the first time in 40 years. The entire 40-year period, we have been below, selling off, losing value. And now we're getting ready to go into a macro monthly uptrend on the dollar. Let's look at the previous times this has taken place. This was our first time right here. The dollar left the bearish control zone and went up 23% compared to the basket of currencies. Here's our next time. Dollar left the bearish control zone and went up 18%. Okay? Here's the next time. The dollar left the bearish control zone and went up for 48%. And let's look at the time frame on this macro bottom right here. This was July 1995, and then our double top occurred in January of 2002. So for 7 years, the dollar was in an uptrend. What do you think that looks like if you're in a mortgage that you overpaid for a house on, that you're in stocks that are just getting absolutely wrecked? What does that look like? The dollar was going absolutely parabolic while the 2000 stock market run was happening. It was going parabolic during that entire period from 95 till the actual crash in the stock market. And then the dollar was selling off 2 years later after, essentially the stock market bubble burst. Then we have here again, from the bottom to the top, another 23% rally in the dollar. Then we have here again, leaving the bearish control zone, another 41% rally in the dollar. And when did this happen? Let's time this one out. This was in 2008 when the dollar bottomed. What happened in 2008? The mortgage crisis. What happened right afterwards? Hard buy signal leaving the bearish control zone. Stock market's crashing. Dollar going parabolic. Retesting, but still in a bearish trend and never put in a new low after that. Double bottom, higher low. So what is going to happen? I wonder. And both situations where those happened, we were underneath the 200 exponential and simple. Now we're above the 200 exponential and simple. So now we're in a bullish macro environment, getting ready to have a trend move in the direction of the trend. These were counter trend moves. We have a high, we have a low, we have a lower high. This is underneath the 200 exponential and simple. This is a counter trend move to the upside, at which point in time we sell off. Very clearly in a downtrend, underneath the 200 exponential and simple, we bottom out, we push back to the upside, a bearish move, overall bearish trend, bullish move to the upside, again, counter trend move. Now we're in a bullish macro environment on the monthly with the same signature happening for the first time in existence, in a bullish trend, about to make a bullish move. So we could literally see something we have never seen before as the dollar collapses eventually. But before that, it goes absolutely parabolic. So on average, if we're going to have a 20% move to the upside, we're talking about a 112 from 92 on the DXY. If we see a 40% move to the upside, we are talking about literally retesting the previous high from 1985 with a 40% move with a 132 on the dollar. So careful who you're listening to. Careful who you're listening to. All these dollar bears, they're so sure about what they're doing here. But now here we have clear bullish divergence, clear bottoming pattern, clear consolidation before continuation to the upside. Maybe fundamentally the dollar looks bad and the Fed printer go burr and all that. But who do you want to trust? Did any of those people that are telling you that tell you exactly right before the big crash in Bitcoin or the big crash in stocks or any of these situations? Did they tell you when the bottom was in crypto? Did they tell you when the bottom was in the stock market? Did they tell you anything useful ever before it happened? Probably not. Probably not. Tesla came back up here, got rejected right before the key level that we were paying attention to. It's at the heart line right now. Probably going to see continuation back down to the bottom of the range. 700 probably will be a buy. Been operating inside of this channel. I think Tesla is completely overvalued and will be the .com bust of all stocks. Love the company, hate the valuation. Uber, Still looks like Rec City, well below the 200 exponential on simple. They have rolled over to the downside. I still expect to get our entry here at $35 on Uber. Remember, this is a company that has never made $1 in profits. And what does that remind you of? Oh, that reminds me of 2000s. Oh, a bunch of companies that make no money with massive valuations rushing out to go public. A record number of IPOs, a record number of SPACs, a record number of companies that don't make a profit with ridiculous valuations. That all sounds really familiar. That's crazy. Pinterest obviously got our massive capitulation dump here, failing to even attempt to come back up here and close the gap. Will this be a runaway gap? It sure looks like it. 200 exponential has rolled over to the downside. 200 simple has rolled over to the downside. We have been basically, all the indicator oscillators have been moving up and price action has gone nowhere. This is Rec City. This trade setup is garbage. Maybe if we find support here and continue, I will leave it and we'll see what happens, but it looks rough. Looks terrible. Wish. And if you are already weak and then the market starts dumping, I don't think you're just going to all of a sudden be strong. I think people will probably flow into the things that are dumping the least or that are most like legitimately strong, like based on valuations. I don't think they're going to all of a sudden run into like value plays on trash. Wish context logic still looks terrible. Again, hard buy signal, tried to push up, couldn't get above the 21. We're right back at the entry. At this point in time, it's almost worth just cutting your losses, but we'll see how the next couple of days go. Again, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Airbnb had that push up here, still in the current trade setup, still expecting it to get up here. It's going to be rough with the rest of the market putting so much pressure, but 15%, we're already halfway there. At this point in time, in my opinion, it's time to start moving, some of these trade setups that are working back up. Wrong tool. Back up to where if all of a sudden we do have a violent sell-off, we don't go upside down in the position. I think something more like this now is ideal. If we look at where price action is right now, just for an idea of what I'm talking about, and then we move our stop loss back down here. So if it breaks down below this point, this support, this Fibonacci level, and this previous wick right here, we'll get taken out of the trade. But if we get the continuation to the upside, that's fine. This is not a regular trade setup. Well, arguably it could be because it's still over a 2-to-1. So arguably you could enter off of this sell-off here, but I don't think that's ideal. I think it's better to just move the stop loss up. And if we break down below, 159, just be back out of this in profit and assume that we're probably going to continue selling off. But again, that's just my personal opinion and how I am trading things that I'm already in profit on. Vodafone, we spoke about this and exactly what happened, exactly what we said happened. It basically just rolled right back over. Failed to get above the 200 exponential, failed to get above the 200 simple, absolute Rec City, total trash. Bumble got all the way back up here to the heart line, could not maintain above that support, dumped, saw a parabolic push up here. What is that? That's a short squeeze. Nothing has changed on this. I still think this rolls over and dumps down to the downside. Baidu, all the people rushing back into China stocks. Yeah, but they're down this much. They're down that much for a reason. I am still extremely bearish on China. These things still look like total trash. And if you don't believe me, we'll just look at the monthly chart. It looks like basically a capitulation, an attempted pushback up here to save the 821 cross, and a failure. Still looks absolutely terrible to me. We do have a buy, sell, buy on the weekly, but we also have all the moving averages directly above our heads. If we get back up above 178 and start to consolidate, I may take a position in this, but there's just so much uncertainty right now in China. Alibaba, same thing, selling back off, even less of a move back to the upside. There is a potential for a trade setup to come back up and retest the breakdown, but it's the same thing. This looks terrible. We broke down from basically a 2015 trend line that has been acting as support, broke down below the 200 exponential and simple on the weekly, and they're rolling over. Looks extremely bearish. I mean, we did hit our target to the downside, but, it's catching a falling knife in my opinion at this point in time. TME, 10-cent music looks terrible. Bouncing that key support line here at the bottom. We have obviously a support from 2018, a support from 2020, and now we have bounced it here in 2021. But we also have that same horizontal support line here that's acting as resistance well below the 821, well below 200 exponential on simple and rolled over to the downside. I mean, not good. Diddy got the move back up, and now it's rolling back over. Looks like trash. Kanzun Music, Kanzun Limited, BZ, got that push back up. Everybody got bullish. This is it. New high. And then this right here tells me I don't want anything to do with this. If this price action holds and it consolidates here, I will potentially be bullish for a move up. But it looks like it's rolling over. This looks like it's probably going to fail. And then as soon as it takes out this low right here, it's headed straight down to retest the all-time lows. This bad. JD.com was able to reclaim the 200 exponential on simple. 200 exponential is still, or has flipped back over. 200 simple is still bearish. This looks like what Bitcoin did. Sold off massively, retested its moving average, consolidate, tries to save price action, and then more than likely going to roll over. What does the top look like? 200 exponential on top, 200 simple rolls over the top. We retested 200 exponential on simple, and then it fails and dumps. Neo looks better than most, but still terrible. Below 200 exponential on simple, rolling over to the downside. Looks like a rejection. EDU, this looks like this is going to fail. Attempted to get back up here. Looked like it was going to cross 821 back to the upside. Bunch of momentum in its favor, and then just dumping. Best to just get out of the way on this one, in my opinion. Peloton still looks like trash. Basically broke down underneath the 200 exponential and simple. Attempted to rally above them. Maintain price action. Here's the difference. The whole way up, people are buying the dips, buying the dip, and then all of a sudden, lower high. So now what are people doing? Selling the rip, and now we're below the 200 exponential and simple, and they're sloped to the downside, attempting to save them based on two candles. And what are these two candles right here from? What is this 15% move in Peloton from? They're going to make their own sweatpants so you can play on your treadmill? Yeah, okay, Peloton. How much are those going to cost? Or wait, no, you're not even going to be able to buy them outright. You're going to have to buy a monthly subscription fee for the sweatpants to wear. And if you don't pay your subscription fee, they're going to come to your house. They're going to take your sweatpants away. And then they're going to probably take your tendies too while they're there, because Peloton is going to crash. This is total trash right here. This shows you how stupid the market is. People got bullish on Peloton because they're going to make sweatpants and hoodies for you to work out in while your dog and child get sucked into your treadmill and die. Okay, that's a good company. They're like under investigation by the SEC, under investigation by like every administration possible, in and out of like court cases, probably going to get absolutely wrecked and have to pay millions and tens and hundreds of millions in fines. And yet here they are pumping 15% because they're going to make you some jammies so you can work out on your Peloton. Okay, Peloton. Fucking people are so stupid. Short squeeze for sure. TSM, Taiwan Semiconductor, got the move back up to resistance. Triple topping right here. I expect this to roll over. Even if this stock just starts absolutely crushing it, I'm sure somehow China will find a way to fuck it up. They'll go take over Taiwan. This company right here is basically, in my opinion, one of the most important companies in the entire market. Taiwan and TSM, Taiwan Semiconductors and like the country of Taiwan are literally responsible for like something ridiculous, like 75 to 90% of the world's semiconductors. And you're like, no, that's not true. We got Intel and we got Nvidia and all these other companies don't even have foundries. They don't even make semiconductors. They literally buy from Taiwan Semiconductors, and then they rebrand the pieces. They put their little stamp on it, and now it says NVIDIA or whatever on it. But the actual components, the actual semiconductors, the actual foundry parts that are made are like 75 to 90% made in Taiwan. So whatever happens in Taiwan politically or socially or economically, and whatever happens with TSM and actual semiconductors is literally going to affect everything else. So there's right now a semiconductor shortage in all these industries. You can't get a washer, you can't get a dryer, you can't get a refrigerator, can't get a car, can't get a computer chip, can't get anything you need because of this problem. And they are literally at the pinnacle of potentially turning into the new Hong Kong. And I say that because, basically the world just said, F you, Hong Kong, and China says, I'll take that, mine. And how's that working out? Well, not so good so far. So if this situation happens in Taiwan, what is that going to do to the markets? What is that going to do to the world economy? What is that going to do to everything? It's not going to be good. What was one of the main signs? There was 3 main signs that were able to allow me to call the CVD incident, the dump, the pandemic before it happened. I was literally screaming at the top of my lungs. What were they? Semiconductor issues, repo market issues, and what was the third one? Transportation, canary in the coal mine. And what is going on right now? Transportation is rolling over and getting absolutely wrecked and is never going to recover. Well, most of it. Container shipment shortages, planes are not flying. There's way less, flights taking place. There's issues with rental cars now because they, sold all their rental cars because the world was done and this and that and the other. And everybody speculated thinking they were a genius. And now they look like a fucking idiot. So you have transportation, canary in the coal mine. And now what's going on with our semiconductor situation? Well, we've been literally in a semiconductor situation for this whole entire time. I was talking about how it was going to be an issue. It's continuing to be an issue. And now they're saying it's going to be years before anything is fixed. And only now, after years of doing buybacks in all these like massively profitable companies, are they now talking about building infrastructure, factories, foundries, becoming self-sufficient. We are going into a macro de-globalization situation, aka nationalism. That is literally the opposite of the trend that has been taking place for the last 100 years. That is macro, massively deflationary. Everything goes up in prices, therefore there's less buyers. Because it's more expensive, because you have to make it locally. Because you can't get it shipped in from China from some slave or whatever that made it for you before, or some company that had no actual like legal ramifications for making people work 20 hours a week and like, all that different stuff. So if we literally go back into resilience instead of, cheap and profits, and in the meantime, for the last 20 years, all these companies, all they did was buy back their own stock instead of building and investing in the future, there's going to be a massive lag. All of a sudden you take away the globalization effect and everybody says, we're going to be self-sufficient now. We're going to make our own food. We're going to build our own semiconductors. We're going to make our own factories. We're going to do all this stuff on our own because we're America or whatever nation you're in, insert X name here. Well, what's going to happen? Everything's going to cost way more money. They're going to have to build all the factories so they can build all the stuff. They're going to have to train all the people so they can build all the stuff. Or maybe they don't even train people anymore because we don't need people because they're all too lazy to work because they've been sitting home getting handouts from the government, laying on their backs, popping out kids so they're slaves to pay for all this in the future. And then robots take your job. And then what's your job? You're a baby factory. And then the robots take your job and socialism for everyone and we all win. Sure, that's a world I want to live in. Yeah, nationalism and the macro deflationary environment based on technology, based on all these, and look, they just okayed all these stock buybacks. There's going to be hundreds of millions and billions and potentially trillions of dollars worth of stock buybacks. It's a last money grab to put money in the pockets of all these people who own all these companies before everything crashes and they go to ridiculous valuations. Look back at, Benjamin Graham, Intelligent Investor. What does a market top look like? Massive amounts of new companies IPOing with ridiculous valuations. Also SPACs, if they existed back then. Okay, check, got that. Massive speculation and ridiculous valuations and people that know nothing about anything. Young people, women, minorities, everybody that was never involved in investing before, all of a sudden now they're involved in investing. Okay, that's Great Depression level, check. And again, I think it's great that those people are doing it if they're learning about it, if they're actually figuring out what's going on. But buying ridiculous things at the top of a bubble and calling yourself an investor because you saw a video on TikTok and it told you to buy into the GameStop AMC short squeeze, that's how you get wrecked. That's how you lose everything. So check, we got those two things. So we have macro deflationary environments. We have everything pointing towards basically the biggest bubble of all time and ridiculous valuations and Can interest rates go any lower? Sure, they can go negative. Well, have they ever gone negative before? Yeah, they have in other countries. Well, not actually. They've went negative based on inflation, but they don't actually go negative. So if interest rates are already at 0 on the Fed funds rate, where are they going to go from there? Because they can't go negative on the Fed funds rate. Fed fund rate can't be negative. So, I mean, probably at the top of a gigantic bubble. Does it have to pop this year? Does it have to pop next year? No, but it's closer to the top than we are to the bottom, guys. Intel looks terrible. Still, triple bearish divergence on the monthly, getting rejected at the heart line. Probably the worst company ever. I saw a video the other day, and they were saying what's better, NVIDIA or Intel. Anyone that thinks Intel is a good stock or company to buy when it hasn't even put in a new high since 2000, the last .com bubble, and now it's about to put in triple bearish divergence top in the next bubble, probably is a moron, and you should never watch their videos again or unsubscribe from them. Just remember, in like a year from now, all the dumbass people that told you all this dumbass stuff and then were wrong about everything, because that's what's most important. Cut those people out of your life. NVIDIA up here at all-time highs, hard sell signal, bunch of red histograms, probably one of the strongest stocks. AMD, crashing down here, got that basic blow off top when it took out that previous high at $100, blew up here, short squeeze situation, lower high, looks like it's stopping, 821, getting ready to cross to the downside. Looks good maybe at $89, but if you start looking at actual valuations and everything on AMD, it's probably worth about $50. So I don't know. I mean, depending on what metrics you use. ARKK, let's look back at Cathie Wood's performance. She is at the prices of December 2020. So Cathie's top innovation fund, her best fund, her biggest fund, her multi-billion dollars that she has, that she's in charge of, so far this year in a parabolic uptrend, when the S&P, when the Dow Jones, when all the main indexes are up like 20% plus to date this year, Cathie Wood is responsible for billions of dollars, taking a percentage commission on those, and she has literally made no one any money in this entire year. At the top of a giant bull run in a parabolic uptrend, when the stock market is completely melting up, when you could literally buy a digital rock on the internet and make millions of dollars off it, Cathie Wood, in all her great wisdom, the queen of investing, the master of the ARK funds, has made no money at all this entire year for anyone but herself. Cathie Wood has literally, she is sinking the ARK. She is the reverse Noah. She is the worst investor ever. Let's look at her next one, the ARKF one. Where is she at here? Oh my God, Cathie, are you ever going to make anyone any money on anything other than yourself? No, you're not. So when she starts talking about oil going to $3 to $12 and innovation and biotechnology and this, that, and the other, remember that all she's really doing is she's rubbing you off and making you feel good about yourself while she reaches in your back pocket and takes your wallet out. Okay, so while you're focused on the hand job she's giving you and the pat on the back, and she's rubbing your chin and she's kissing you and telling you how handsome you are, she's stealing your wallet out of your back pocket at the same time. So you deserve it. Skills getting absolutely wrecked. We got the push up. Exact trade setup played out perfectly. 30% to the upside. Short squeeze out like trout, and now it's dumping. Told you about second potential position here. If the 886 hold, the 886 did not hold. Bam. Brap, that's a wrap. Teladoc, pathetic, not getting any move to the upside at all. I still think this thing is going to get absolutely wrecked. There's still potential here for an 18% little pushback up to the upside, but I mean, it's rolling over and looks like it's going to the downside, and we're still at the entry price. This looks like garbage to me and is no longer valid. There's no reason to just get stopped out on this, in my opinion. Palantir, again, trying to get above this. Looks a lot like Tesla. It's really just got to get above this resistance. It's above the 200 exponential and simple. They are sloped to the upside, but it's really got to break through this. If it breaks through this, comes back down, retest it, find support, $27, I think Palantir can start looking good again. UBX, Unity Biotech Holdings, again, well below 200 exponential and simple, rolling over to the downside. Looks like it's getting absolutely wrecked. Looks like it's going to continue getting absolutely wrecked. Probably takes out the previous low back here. It just looks terrible. The markets look terrible. And this is exactly what I was talking about. All that free money, all that government assistance, all of a sudden everybody's waking up. They can't buy their drugs anymore. They got to cancel all their subscription services. They're not going to be able to invest in AMC in their mom's basement because they don't have any more stimmies coming from the government. The only way anybody's going to be able to make any money now, all these bum people that haven't worked for a year, who's going to hire you? Who's going to give you a job when you've been sitting around for 18 months collecting free government money? The only way anyone's going to make any money in the future is by being a slave harvester, aka a baby maker. So the government's going to need all these people to pay off all this debt that it's borrowed. So the best thing to do is either be a woman or a birthing person, whatever it's called now, and have as many babies as you possibly can, and just vote and pray and just help people cross the border and bring in anyone you can from any other country to vote for more Democrats so that you can get paid $300 a month per child to be a baby factory so that we'll have slaves to pay off all our debt. That's your only hope. That's the only hope for humanity. If you guys don't literally just keep making slaves to pay off all the debt in the future, we have no hope. But unfortunately, the birth rate in the entire world, with the exception of basically a couple small groups, based on like religious or, basically, like there's only one or two groups in the entire world that have a positive birth rate. And when I say positive birth rate, I mean you need a mom and you need a dad, and then they have to get together. Or you need a birthing parent and you need a sperm donating parent of any sex, because apparently that's the thing now. So you need some sperms, and then you need a birthing device human. I'm just trying to be politically correct here for all the watchers out there. And then those two things get together and poke their little stuff together. And then they got to make more babies than them together. So if you have one birthing person and then a second sperm donating birthing person of any sex or race, and then they get together, they got to have at least two non-binary children. I hope that's politically correct. And then those two non-binary children have to both survive and not die of an OD or kill themselves so they can be a functioning member of society, and then eventually they can further human race. But probably they won't even be able to have kids. I mean, let's be real here. Our future is bleak. I think the average in the U.S. is like above 95% of the rest of the world, and the average is like 1.2 kids per two parents. So that means that our population is going to drop by like 50% in our next cycle. So probably not good. Probably like 100 years from now, like there'll probably be like a quarter as many people on the earth. At the rate we're going, assuming nothing changes. I mean, let's see how it worked out for China. China's like, oh, our population's through the roof. There's billions of us. Everything's going great. And we have the one-child policy for however many years. And now all of a sudden it's like, well, no, now you can have two. Well, no, now you can have three. Well, now you can have as many as you want. And they're like stealing kids from neighboring countries because all they have is a bunch of men with no wives and no one wants to have kids or families. Probably they're lying about their population numbers, if I had to guess. Because you can't just have only boys and only one per two parents for decade after decade and have positive population growth. I mean, unless you're the United States and you just let everybody else like come here from every other country possible. Which again, that's obviously part of the plan of the Democrats, is to bring in as many like immigrants as possible so they can pay for all this stuff. Because no American's going to go jobs. Like, they're not going to work anymore. Americans, I'm not going to go to work. I'm not working. I'm not going to have no job. Uncle Sam going to take care of me. I'll tell you what, boo. And if not, we're going to have Rhonda have as many babies as possible because we ain't doing no works around here. Uncle Sam going to give us $300 per month. We're going to get that social welfare, going to get us some food stamps down here, and then next thing you know, they're going to be paying us for this, and we ain't going to have to do no work because the machine's going to be here, and I'm all in on AMC anyway, so when the movie theaters take off there, I'm going to be a millionaire. Tell you what, boo. Yeah, good luck, guys. We're fucked. Unity software got the measure move to the upside, hit our target perfectly. Nice little 13%, and looks okay. Maybe get continuation, but probably going to be weak if the rest of the market's weak. Zillow looks absolutely terrible. Again, just looks like it's getting ready to roll over. Throat has been slit, bleeding out, well below 200 exponential on simple, both thrown over to the downside. What does this tell you about the housing market? Probably not going to be a good. Corsair Gaming got a nice little push up here. Didn't quite get to our target here. Still above the 821, moving to the upside. Got momentum in its favor. I still am pushing for this to at least tag the 200 exponential, but it's looking weaker and weaker. And the likelihood of getting the 200 simple is not looking great. If it breaks back down below 200, the 8 and 21, it's probably going to look like a failure and head back down here lower. And I'll probably get that entry at like 23, potentially 19. We'll have to see. We'll have to see what happens in the market. I suspect it's probably going to get bought back up here, at least temporarily. Zoom, this looks terrible. I mean, it looks like it's going to fail. It's still up, but honestly, I think stop loss should be at break even at this point in time. There's definitely potential still to get back up to 200 exponential and simple and close the gap, but stop loss should be at break even. We do have the buy sell, potentially about to get the buy signal, the bullish divergence signal. We'll have to wait and see. But again, it's not worth potentially taking a loss on some of these, in my opinion. Square did exactly what we said. Came all the way back up to the top of the range. 1, 2, 3 touches on the top of the range. Going sideways inside a channel forever. Coming back down here to the heart line and the 200 exponential and simple. As expected, no doubt we will be able to pick it back up here if we want to, but more than likely it will probably break down, come back down to the bottom of the channel, and then we'll see a retest of the 200 exponential and simple. So I think more realistically, we're going to want to buy down here and then take a long position back to the heart line for something more like this. I think that is probably the next trade we're looking for on Square. Which I'm curious, has anybody ever used like Square Pay or whatever before? I've never actually used it, and I'm curious if it's like actually decent and functional. So if you have, let me know in the comment section. PayPal, exactly what we said, came back up to 886, hit our target perfectly, another 9% little scalp up here to the upside off of our buy zone, off of our ascending slope line right here. Basically topped out just shy of the 886, broke down below the 786, headed back down here to the 618. We'll have to wait and see. Could get right back down here to the 0.5 and potentially be our next entry. I would not be surprised to see this basically. Damn it. TradingView, get your shit together. I would not be surprised to see this come back down to like right over here. Like at the 0.5 and then potentially get another trade set up out of it. This has been so easy. But, we're looking at basically a giant ascending triangle. Expecting this to hold for now. If this breaks, though, maybe don't want to take this position because we may be going to come back down and retest the bottom of the range down here. So we'll have to see what price action looks like at the time, but that's been an easy one to trade. eBay still looks good. Basically hit our trade setup at this point in time. That's a wrap as far as I'm concerned. It looks like it wants to come back down here. It's at support now. If it breaks down, it's probably going to come straight back down to $65. I imagine eBay's numbers probably look terrible right now because without them stimmy checks, who's buying stuff off the internet? Amazon, same thing. Any of these online retailers, even places like Walmart, probably getting wrecked right now. Snap. This thing just looks like it's getting ready to capitulate. I really think this thing is coming back down here. I would not be surprised to see Snap at $60 this week. That may be the options play. I'm going to really have to look at those options and see what they are right now. It might be a solid options play on this. Yeah, I'm going to look at those. Probably discuss that further in the group with a couple of you guys, especially you options professionals. You know who I'm talking about, CZ. CW. CZ Binance, that's who I was thinking of. Apple selling off from this key support line right here. Back at our breakout after hitting the measure move perfectly of the ascending triangle. Back down here testing that support. They also you could argue that it was they had that ruling come through. That's going to fuck their finances over. If everything else stays the same and then they can't make 35% of apps that are sold on the store, it means their revenue is going to go down. So that's not good for like their valuation or like earnings. So we'll have to see. I really think Apple's going to break down from here and come back and retest some of these levels. Now we got quite a bit of support at 143, got quite a bit of support at 135. But what is this? Is this just like a massive distribution pattern playing out? We basically took out the high back here, came back down, pushed up one more time, and now we're going to sell all the way back down to like 116. I would not be surprised to see Apple back down at 116. Amazon still looks like straight trash. Obviously, you guys know I was talking about everybody that gets tricked right here. And now here we are retesting the same resistance that has stopped us from going any higher. Perfect trade setup, played out perfectly to the top of the range, and now I expect it to come all the way back down to the bottom of the range. I'm expecting some support at 3,200, but I have a feeling Amazon will be at 28. Let's say 2,900 just to keep it simple, but it's going to get absolutely wrecked. If literally it couldn't do anything since July of 2020, over a year, it just went sideways, had this one push up here who trapped everyone upside down who bought into this, including Mr. Downtown Josh Brown, one of my faves out there. I think Josh, you really screwed people over here, man. You're like the new Jim Cramer. Amazon's breaking out after this consolidation. It's going to the moon. No, probably not. Facebook still creeping up over here. Looks like it's about to get the hard sell. Weakness. But, it's at all-time highs. Facebook was the place to be here. Let's be real. Not percentage-wise, but just bullishness. Google seeing the worst candle we've seen probably the entire run. Damn, you could argue maybe one of these is like the same size, but okay. Yeah, so Google seeing the worst candle since September 2020, pretty much. Not good. Not good. Below the 8N21 right now. Probably going to push back up here to like 28.90, but hard sell signal, bunch of red histograms. This has just been melting up, obviously. We're melting on up. Netflix finally got the breakout. Is this just going to be the next Amazon? Is it just going to Amazon it up? Trap all the moon boys who are like, finally, let's do it. We're going to the moon. Is it just going to give us one of these guys right here? Probably. That's probably what's going to happen. That's realistically. I would literally bet on it. We'll wait and see. I'll just leave this in place, and then we'll see how close I am to that being like the actual price action that takes place. But I have a feeling that's what Netflix is going to end up looking like. So, all right, let's keep ripping through here. What's up, Bubblies? Good to see you, my man, as always. All right, time to make everybody sad. You guys know what time it is. It's crypto time. Crypto's to the moon. Hooray. Crypto's the best. Crypto's in a bull market. You're stupid if you don't think crypto's bullish. We're going to 100,000. No, 200,000. No, $1 million in crypto by the end of the year. No, the end of the week. No, the end of the day. Probably not. Bitcoin futures on the daily broke down below the 821, came back up, tried to retest it. All the FOMO moon boys just bought into this little pump today, and now here we are getting wrecked, rolling over, coming back down to retest the 200 simple at 42,000, and 200 exponential at 38,860. All weakness, hard sell, coming back down to the bearish control zone. All red histograms. Crypto looks like trash. Crypto looks like trash. Okay, so now we're seeing the situation play out exactly as orchestrated. The 200 simple came above the 200 exponential. We rode down. We found resistance. Then we found support. Broke above to the top. Throw over right here. Capitulation move off of triple bearish divergence. Triple bearish divergence, dump. Triple bullish divergence, pump. Triple bearish divergence, dump. So what do you think is going to happen right here? Well, we have now closed below the 200 simple. We have closed and opened below it, closed and opened below it. And now here we are bearishly engulfing the previous day's candle. So now we're coming down here to retest the lows. More likely headed back down to $41,500, at which point in time I would expect us to bounce around here for a little bit. We have lost the slope on the TJD TDMACD. We have gotten the hard sell after our divergence signal, leaving the bullish control zone. It's looking like Wreck City, folks. Does not look good. We got the reaction rally off the 21. We closed at the 8. Now we're headed back down to the 21. And then more realistically, at that point in time, there's no support. And on the weekly, if we come down to the 200 exponential, 20,000. 20,000. And what is happening down here that we talked about specifically? Well, we rolled over all red histograms. We come back up. The slope line flipped back over blue. That is the most bearish signal that you can ever see. When that happened, look right here. Flipped over blue, breaks down, comes back up, rejection, bearish, continuation. Rejection, bearish, continuation. This will roll back over red and get absolutely wrecked. Looks terrible. Looks absolutely terrible. And we have a lower high. That's literally what market tops look like. It's still possible to save the trend, but it looks terrible right now. It's literally doing exactly what I said was going to happen. I know people don't like hearing that. I know it hurts their feeling because they were moon boys and they're counting on this. But look, this was our top right here. Capitulation. How much price action do we lose from our mini top right here to the bottom? 63%. How much did we lose from the 14,000 top? 14,000 top to our Rome bottom, 72%. Let's look at the previous time we went into the bear market. Okay, same exact situation. 200 simple rolls over the top here. How much did we lose from our top right here to our $3,000 low? 68%. How much should we lose from our top here to our bear market low? 85%. And let's just look back at one more just in case you still don't think I'm right. Same exact situation here. 200 simple rolls over the top. We get rejected. How much should we lose from the top to the bottom? 78%. How much should we lose from the macro top to the bottom? 86%. So I guess we'll wait and see. But let's remember that when this happens, by the time it's all said and done, you're going to be down 80% and I'm going to be right. So you lose 80% of your money and I'm right. Maybe hedge your bet. Maybe hedge your bet. But remember, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. And don't go all in on some shitcoin because it's going to the moon. Because you're going to be going to the grave. Because you're going to lose all your money and put a pistol in your mouth to try to cure your headache. But please don't do that. Please reach out for help. Bitcoin, let's look at some of our other indicator oscillators. Triple/quadruple bearish divergence on the Stoch slope, and now we're getting wrecked. Triple/quadruple bearish divergence on the Fisher Transform, and now we're getting ready to get wrecked. And then obviously we saw our breakout in red volume after triple bullish divergence on the TJD waddah explosion, and now we're getting wrecked. We are gaining steam to the downside. The trend is strengthening. The blue slope line right here is increasing, and the volume and selling is increasing. The momentum is increasing to the downside, and we are at key support right now. So if we break through this support, next target to downside 42, next target to downside 39, and then shortly after that, Michael Saylor will pull his exit scam and run away with all MicroStrategy's money / all the Bitcoin and fake his own death or something. I predict it now. Someone save the clip, because when it happens, I don't want to have to go look for it. Blah, 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 blah. Not even gonna bother looking at these. Same thing. Obviously called it. Been right about everything. Gonna keep being right about everything. Ethereum, lower high. Could not get back above 4,000. About to cross 821 to the downside. Attempted to push back up as predicted. Could not cross them back up and now selling off. Ethereum still more bullish than most cryptos. Most big cryptos. A lot of shit coins look good right now. ETH to Bitcoin ratio continue to sell off back down to this range. Looks like it's going to just slowly weaken here as it bleeds out. Could potentially push up though. Solana could not maintain those all-time highs. People took their money out of Solana and then bought some other random shit coin, bumped it up, and now Solana is going to go back where it belongs. Way lower. Could not quite get to the 4.236, which was our next target. Still hanging on to the 3.618. For how long? Probably not long. Oh, no, it did get. Sorry, my line was just off a tiny bit. We hit it perfectly, 4.236. Headed back down here to 141 next. After that, probably $90. Realistically, though, if this ends up being the macro top from the low back here, let's say, to the high right here, depending how we look at it, we'll turn this one green. We're paying attention to the 122 level. If it breaks down to 122, it's going to look like a macro top. After that, 90. It could get there quick too. Sell by sell signal top of the range, leaving the bullish control zone, all red histograms. This is Solana is the dream maker slash the nightmare breaker. FTX token. This was one of the group requests right here. Broke out to a new all-time high. Remember, I was talking about this. I expected shitcoins to go to new all-time highs and shitcoin market cap to pump up here. And that was confirming to me, based on Bitcoin dominance and total market cap slash shitcoin market cap, that the top was in and that this is the blow off top of shitcoins before we go into a multi-year bear market. So remember, take profits early and often on these shitcoins. Well above the 200 exponential and simple, well above the 821. Looks like it's selling off right here. Looks like it wants to top out here. We're seeing a lot of rejection wicks at the top of the range right here. Not great. We're seeing rejections to the downside too, though. If it closes below 70, it's probably going to 64. The 200 exponential and simple are way down here, and the 200 simple is still well above the 200 exponential. It could save this trend right here, but the key levels I'd be looking for on a breakdown are like $45 to hold. Should hold though, honestly, above. This should act as a pretty strong support at like 60 bucks. If we go from the swing right here to the swing right here, you know, basically if we get down to the $60 range, 62 bucks, it's probably going to confirm that this thing has topped. If we look at it the other way around and we just look from the top here to the same bottom right there, we'll turn that one yellow, and then we'll look at the fib extensions. Pushed up to the 1.236. Could get a little higher. If it goes higher, 94. If it goes to 94, it might as well be 100. And then who knows, maybe it'll Solana it up and go to 200. But probably not. Probably not. I mean, it's just going to be one shitcoin after another pumping. And it's probably going to be the new ones, and it's probably going to be the completely speculative ones with absolutely no working products or anything. Chainlink came back down to 200 exponential, exactly as expected. Did get back above the 821 and 200 simple, so could see another move all the way back up here to 35. But these things look dead. All these cryptos look like trash. Phantom, another request right here. Hard sell signal, leaving the bullish control zone. It's above the 8 still, but it's probably headed back down to the 21, $1.12. Again, if we look at the Fibonacci extension targets from the high to the low, they hit the 1.382 perfectly, topped out on a wick, rejection candle, selling off. Definitely not looking great here. And obviously, new all-time high. Like I said, shitcoin's pumping to the moon, bruh. I expect it to get back down here to the 236, back at about $1.05. After that, maybe like the 382, and the $1.05 is basically, well, about $1 is the previous all-time high. So this is going to be like the target range to see what happens, but looks bearish. Bunch of reddy reds. Serum SRM broke out to a new all-time high, technically at support, which was again the previous all-time high. You know, we don't even have to do a Fibonacci extension. Well, we can for a target. Can give you a target on this guy. The 1.236 going to be $19. Does it get there? Probably not. Could it get there? Sure. If this area holds right here and it starts to look continuation and breaks out, that's where my target would be, $19. If it tops out right here, you know, we're just going to watch these same fib levels on the way back down. You know, if it gets basically down here to like around $9 again, it's going to start looking like trouble, but still looks bullish, still strong. I mean, stronger than anything else today, but obviously a bearish engulfing candle. I mean, for me, probably not the best time to be putting money into anything, in my opinion. XRP still looks like shit. It's funny seeing all the XRP videos. It's like, XRP, this is it. We're going to 240, $3, $10, the moon. That was like 10 minutes before XRP dumps and the markets crash. And now all the little XRP moon boys, they're like, oh no, they're just suppressing the price so they can accumulate more because there's contracts and the XRPs, because the SWIFT and the SEC's working with the big banks and the, shut up, you conspiracy fucking retards. XRP is garbage. It's trash. And everyone in your cult either killed themselves or quit. There's about 10 of you left. Give up. Just give up. Pick a new cult coin. Wow, you're too late now. Next cycle, please give up on XRP and pick something else. Looks like trash. Looks like it wants to come back down here to 90 cents. I mean, what a terrible, terrible crypto. Basic attention token broke down below the 821. Looks like it's getting ready to crash here. Tried to rally back up, could not cross it over. I mean, it's going to come back down here and start retesting these levels. I think it'll be back at 60 cents before long. It does not have a ton of good support along the way either. Maybe 67. I mean, not good. Uniswap barely hanging on at 200 exponential. Saw almost no bounce right here. Everyone gave up on Uniswap. The fees are too much. The fad is over. They migrated to Solana. What happened to Cardano? Oh man, isn't today Cardano Day? AKA Cardano Sex Day? Aren't they all lining up, just banging each other in the butts? I think it is. We'll have to look at Cardano next. XDG, Doge, back down here hanging on to the 200 exponential and simple. Again, all the Doge boys were out here talking about new all-time highs inbound. We're above it. Blah, 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 blah. Trash. Doge looks like trash. Doge looks like trash. 17 cents, doggies. Cardano, there it is. Looks good. It looks strong. It's at all-time highs. And then if we flip this chart upside down, it looks good. The 821 are crossing to the upside if the chart was upside down. We're seeing some strength coming in if the chart was upside down. We're going to probably retest the 200 exponential moving average, which would be at $1.56. But if the chart was upside down, that would be a move to the upside. So that's good. Probably going to see some kind of support here at $2.31. Probably nobody's going to be able to sell because they're all staked. All their Cardanos are staked. Probably going to be back down here at $1.60. So if you were in here at $3 or bought at $3 or didn't sell at $3, you're probably about to be 50% less rich. All red histograms selling off. Buy the rumor, sell the news. I don't know if the actual smart contracts worked, but if I had to guess, I would say no. Charles Hoskinson, still a bitch nerd scammer. So, yep, that's how I feel. Chucky. Sushi looks terrible. Rolling over here. Retest the lows here soon. I mean, man, all these look like trash. Matic, still trading very technically. Broke down below the 0.5. Headed back down to retest the lows at 382. $1.10. After that, 88 cents. If it breaks to the upside, if it can get back above $1.57, I think it could get to $2. But that's only if it just becomes like the shitcoin of the week. Dot looks good. Looks like this is about to be the new shitcoin of the week. Hey-o, polka dot. Poke me in the dot. Polka dot looks strong. Coming back up here. I mean, let's be real. At this point in time, polka dot, if it breaks through the level it's at right now, it's probably going straight to $50. So what is that? Oh my gosh. Is this the next shitcoin? Shitcoin of the week? It probably is. Probably going to have to dot my I's and cross my T's, if you know what I'm saying. That's 3-to-1 risk-reward ratio on the dot. I mean, this thing probably is about to just go nuts. I mean, not because it's good or it's useful or anything like that. Probably just because it's shitcoin of the week. I mean, this thing, let's be real here. If we break out, oh man, do I have to buy fucking Polkadot? Oh, I mean, I still have some, but do I have to actually trade some of this Polkadot? Man, this is probably going to go up like 100%. Watch this shitcoin rally. Watch me shit. Watch me rally. Or no, it's whip and nay. I don't think that's right. Yeah, probably going to do something like this. Probably going to go up 100%. And, I mean, with the 9% stop loss, it's like over a 10-to-1 risk-reward ratio. So, yeah, I mean, Polkadot is probably going to go nuts here. It's going to have a tough time getting above $41, which is like 10% to the upside. But after that, it's probably going up another 20. And then after that, it's probably going up another 65, 70. I mean, I hate buying at these levels, but let's be real. This is what shitcoins do at the end of the cycle. They just take turns pumping. but they also take turns dumping. So Litecoin, total piece of trash, total garbage, total shit, shitty shit, trash, probably the worst. XRP is slightly worse than Litecoin, but Litecoin is pretty bad. And then Dash is like just as terrible, if not more terrible than XRP. Bitcoin dominance broke down from that level, closed a new low, looks terrible. What does this mean? It means probably we're just going to see random shitcoins pumping, but that means, in my opinion, the cycle is over. This is it. It's done. Bitcoin will not put in a new all-time high this cycle, in my opinion. But what do I know? Total market cap was able to maintain above the 8. Probably just going to start bleeding out. I expect it to just stay sideways here as long as it can while we see like these random shitcoin pumps. Basically just distribution all over your face. So have fun holding bags, losers. Riot blockchain rejected again at the same level. Back down here to 200 exponential, crossing over red, below the 200 exponential, below 200 simple. This thing is just going to get absolutely wrecked. It's like buying Bitcoin that's worse. Like, I want to invest in Bitcoin. Should I buy actual Bitcoin or Riot blockchain? Well, do you want actual Bitcoin or do you want a worse version of Bitcoin? I'll take the shitty one. Okay, here's Riot. $21. Retest the lows. This thing looks like trash. Maybe 25. It finds some support. MicroStrategy looks like trash. I mean, how long before this thing breaks down below 200 exponential on simple? Probably not long. It looks like straight trash. Coinbase, trash. Don't even have to look at it. It looks like trash. Trashy trash. Should be at 0 since they don't even have an exchange that works. And the company's supposedly worth like $60 billion. Yeah, it looks like trash. I mean, it's at the 236. Should find some support right here. But if it breaks down, it's just going to retest the lows. So see you at $200, Coinbase. They'll probably exit scam with your money. So careful if you have money on Coinbase. Robinhood found a little bit of support. Looks like trash. Gee, go figure. All these look like trash. GameStonk broke down from key support, pushed back up and selling off. Looks like trash. Below the 8 and 21. Most likely coming back down here. Retest to 200 exponential and simple. 147. AMC. Oh, we got the move. Okay, so this is what we're talking about. Ascending triangle. Looked like it was going to break out to the upside. It did break out to the upside. Looks like it's going to see continuation, possibly as high as $54. 54 looks good. After that, potentially 61. Yeah, topped out exactly at the 618. I think probably like $60 if we can get above here. Good for you guys, man. Good for you, apes. We're doing it. We're squeezing the shorts, guys. Oh, feed me another one of those poopy bananas. Oh, they're so good. Bed Bath & Beyond looks like trash. Got the bounce off the bottom of the triangle. Potential for like a 51% move up here, but probably just going to take a shit and fall out the bottom. Definitely some potential here for a 10 to 1, or no, 8 to 1 risk reward ratio. It's not bad, but it looks terrible. Newegg looks terrible. Still just oscillating in between the $19.51 and $17 range. And I do expect that it is probably getting closer and closer to breaking down. $13.77. Probably going to happen very soon. Maybe even too soon, if there is such a thing. Definitely looks like it's about to get wrecked. Get wrecked. DraftKings. What time are we at right now? How are we doing? 217. Oh, we're crushing it. Hey, if you're there in the chat, say what's up, or just put a question mark, or let me know where you're at, or just put that you're awesome. Anything at all. Interact with me, please. I beg of you. Smash the like button. Punch your computer screen. Anything. Tell your mom she's ugly. I don't care what you do. Lock your kids out of the house. Anything. Just tell me about it. DraftKings. I still think this thing could have continuation to the upside. I think these online betting sites going into football season, I mean, and then God knows, there's a strong argument for these things doing better, but technically looks like it topped out at the 786. We'll have to see. I really want to see support hold at like $60. If it does and we consolidate, I think it goes back and retests all-time highs. But it's just at super elevated levels on a technical breakout. But we'll see. We shall see. Let's look at our commodities. Commodities nuts. Got him. Gold looks terrible. Gold looks absolutely terrible. Still looks like straight trash. Below the 200 exponential and simple. Below the 8. Below the 21. But the hammer, it's bullish. Sure. Sure it is. What does this tell you about inflation? The smartest people in the whole world buy gold when there's uncertainty and inflation. And gold has been selling off. The smartest people with the most money are selling gold. But there's going to be record amounts of inflation. Sure there is. Sure. ZAG. Silver looks terrible. Below the 200 exponential and simple. Both rolled over to the downside. The old silverback. Sorry guys. Late to the party. You know what probably crashed gold and silver? Honestly, the middleman charging too much money. If the like online retailers and pawn shops and everybody weren't charging ridiculous premiums, they probably could have broke out and saw a continuation. But all those greedy bastards speculated that prices were going way higher and built up this massive like FOMO, and they never dropped down the premiums. And now prices are starting to get wrecked, and they're stuck with all this inventory, and they paid too much money, and they're still trying to charge too much premiums. And what's going to end up happening? They're going to end up with bags and bags and trucks and boatloads full of gold and silver, and they're going to be underwater on them because they're supposed to be businesses selling things for slightly higher premiums than what they paid for it. And instead, they tried to be speculators, but they can't read a chart, and now they're stuck eating farts. Losers. Ha ha. Got him. XAG silver looks like it's about to just get wrecked. Wrecked. I mean, it just wants to let go. Let it go. Let it go. Can silver go back to the teeners? It could. I think it's going to drop 10% soon. It looks like it really wants to let go. Gold silver ratio looks like it's going to push back up here. Still expecting gold to gain strength compared to silver up to potentially like the somewhere between 85 to 89 range. Obviously been calling this forever. It's exactly how we called the, situation was done here. Yeah, I mean, it's obvious. People just can't read charts. And then there's a lot of people that actually do know how to do technical analysis, but they're so biased. They could look at a chart, and if it says an asset they like as the ticker, they'll like say different technical analysis than if they saw the exact same chart, but it said an asset they don't like. They would have two different technical analysis. I don't even know how to phrase that. They would have two different analyses of the technicals. They would analyze the charts differently because of what the name is on the chart, not what the chart is telling them. And that's where your bias gets you fucked, and not in a good way. XPT, I mean, this thing's getting crushed. And you know what? Platinum and palladium are probably going to get crushed because their main use is in, catalytic converters. So if you can't get a car because the factories can't build the cars because they don't have the semiconductors, and then people don't want the cars, and everybody's buying used cars, and now the used car market's going to crash, and the new car market's going to crash, and we're going electric, so we don't even need the catalytic converters anymore because the electricity doesn't make the smoke. We don't need it. Platinum and palladium probably just going to get wrecked. This thing looks terrible. Probably the worst metal chart. But I do expect to buy it once it reaches a low. AG, First Majestic, looks terrible. Looks horrible. About to put in new lows. It looks like just rolling over. This rejection candle told us all we needed to know. Nobody really wants this. They're selling into the pump. Silver Junior looks terrible. Just rolling over. Bleeding out. Throat has been slit. Time to die. USAS looks terrible. Going to keep dumping back down here. This is one that I'm actually paying attention to because the actual valuation is probably at some point in time going to be like below their like assets on the books. So at some point in time, I think when we get down here to that 786, we're going to get a nice solid buy. But that's still a hell of a way down. 80 cents. God. We'll just chalk this one up as going to zero. I think that's probably the best way to go. Pot stocks look terrible too, man. I honestly, Man, I pulled out some profits on uranium and put them into pot stocks, and now they're just getting wrecked. They're probably just going to zero, and just people are just probably going to grow their own pot, I guess. I mean, that's what the charts are telling us. If we go down much lower here, this is like game over. Maybe like 1139 on Tilray. I don't know. Eventually they'll go up, but could be years. ACB, same thing. Just looks wrecked. This thing's rolling over below 200 exponential and simple. They just look like trash. Can't all be winners though, you know. Can't all be winners. CGC, I'm assuming that this has went out of business at this point in time. I mean, they're probably going to get dropped from the stock market. I don't know. Something wrong with Canada, I think. Because nothing has changed with pot. But all these Canadian pot stocks are not looking great. URA going absolutely parabolic. This is just a Sprott squeeze right here. Unsustainable in my opinion. Max volume at like new all-time highs. I mean, one company has cornered like 25% of the market, so it could go absolutely parabolic, but I don't even know. UEC, same thing. I mean, it just looks like continuation. New all-time, or it's not even all-time highs, I don't think, but I mean, we broke through the high right here, came back down, retested key support. I thought it was going to get down a little lower, the 200 exponential and simple on the weekly, but I mean, looks like it's just getting ready to 435. After that, $7. Yeah, I don't know. I really think we're going to touch the 200 exponential and simple. We're just now flipping over like the weekly. The monthly looks good. Yeah, I mean, it's hard to not love uranium right now. But again, I mean, these things have already come up so much. And it's not like all of a sudden we're just going to need all this extra uranium. I don't know. It's a tough one. Back to 2014 prices, though. 200 exponential and simple, strong to the upside on CCJ. Looks good. Took out the high back here, retesting previous highs. I mean, if it gets above 26.78, it's probably going to head back up here. And, I mean, more than likely going to see like $44. I mean, it just broke through the 618. Probably, I mean, realistically, $33. Bye. Next target, 786. URNM. Let me switch that back to the daily. URNM, just crushing it. North Shore, new all-time highs. Blue sky breakout. Once we took out this top right here, I mean, there's nothing but blue skies. Nothing but blue skies. I mean, let's look at where the next key fib extension was. Yeah, I mean, $115, I think. This could just run. Could just rip. I don't know, though. I mean, there's a possibility that if everything else starts coming under pressure and Sprott's putting a bunch of upward pressure on uranium and everything else is going down, there's a possibility that uranium just goes absolutely parabolic as basically everybody just FOMOs into the one thing that's going up. That is a legitimate possibility and probably worth taking a shot at, honestly. I probably will. I'll probably FOMO back into some uranium. Get that yellow cake. Copper putting in another lower high. Everybody's saying now copper is going to do the same thing. It's all Sprott. Sprott is pumping up the price on uranium right now, and everybody else is just FOMOing in. I don't think that that's going to happen in copper. Copper already had a beautiful run. Uranium had an okay run. Lithium's putting in a lower high here, getting rejected at the key level. I mean, I think we're coming back down here to like 75 on LIT. Look what happened to hydrogen. Exactly as expected. Retesting the low back here. Probably headed down to put in a new all-time low. Too tight of a range to trade in, but definitely still watching this one. But again, the hydrogen is so far off from like actually being like functionally useful. LBS1 lumber got the perfect touchback up to the 0.5. Saw that 38% pump perfectly. Got a rejection coming back down. Still looks okay, But rejection candle and another rejection candle, little spinning top. Could go either way, but looks like it's going to sell back down and retest the range. I expect it to put in a higher low when it comes back down. Could keep pumping here, though. 836 on futures anyway. I don't know. I mean, that's a tough one. It's already gotten wrecked so bad. It's hard to call for more further downside. Caterpillar looks terrible. Below the 200 exponential on simple now. Ever since it broke down from this range, it's looked terrible. It looks like it's just getting ready to let go. Let it go. Let it go. 193 next target. After that, 175. I mean, looks terrible. But the infrastructure package. We're going to build the roads and the bridges. AMAT, AMAT. Wait, did I? Hang on. I cheated. I just skipped like 10 tickers. Deer is next. Doesn't look as bad, but still looks weak. Down at support. We've been getting support off this blue line, so I'm going to try to get it again. 821 crossed into the downside. 200 simple has rolled over top the 200 exponential, though. This looks very toppy. It could easily break down to like 340. This thing's going to get wrecked when it lets go. But the farms and the food and tractors. Antero Midstream Capital, that water play, that H2O, that Aqua. Yeah, it looks bad. I mean, it's trying to push back up here and take out the high, but it bullish control zone, losing strength. Still looks okay. It's above the 8 and 21. This thing could easily just creep up here. If it takes out the high, I think it's going to rip. Could easily see it back at 13 bucks. It looks better than most everything. Which doesn't say much because most everything looks bad right now. Cemex, CX, just trading inside this channel at this point in time. The green being our support down here and the yellow being our resistance, or somewhere around in that range. It doesn't look particularly great, but I mean, in all reality, what's going to happen here? Let's be real. It's going to go like sideways, roughly, back down here, hit the 200 exponential on simple, bounce up here, put in a lower high, and then come back down and break the range. More likely than not, in my opinion, based on technical analysis. Shut up. Cleveland Cliffs, CLF. Since it broke down from that channel, it has not been able to reclaim those levels, so probably just going to break down here. I mean, it's been trying and trying and trying. This is a key support at like $21. Again, we're looking at that same signature. Breaking down from a key level. We got 200 exponential and simple, getting ready to roll over, add a key support, turn resistance, turn support. It's probably going to end up somewhere around there at the 200 exponential and simple moving averages, like somewhere in that range. What it does after that, it's going to try to push up. I don't know if it'll keep going, but I feel like these companies are about to get wrecked. I mean, iron and steel companies they've been hanging on. They're trying. Ford, short term, probably going to go down. Long term, I think they're making some good decisions, closing some of these plants down. 200 simple rolling over the 200 exponential. It's going to try to bounce this level for sure, but I don't think we're getting back above 14 bucks anytime soon. GM looks terrible. Below the 200 exponential on simple, they're rolling over. We got our target down here at like 41 bucks. Probably going to find support at like $45. There may be a scalp in here at some point in time, but too many of these things are breaking down below 200 exponential and simple, retesting them and getting rejected. So that's what I expect to happen. Hasbro still looks weak. We really want to see it hold on to this level, but it's just getting walked up by 200 exponential and simple. It doesn't look good. And I'm telling you, I honestly think the economy is right about to like roll over and die. I don't think people are putting enough weight on how much free money is not going out anymore. And I think it's a huge deal. Like, people have literally been laying around watching TV, doing nothing and getting free money for the government for 18 months. So people are just going to go back to working 60 to 80 hours a week and just kicking ass and taking names back like nothing happened while nothing has changed. The pandemic is no better. Now we have vaccinations, but the vaccines didn't even really do anything because breakthrough cases. Everybody's got to still wear masks, go back to school. The economy's shit. There's no more trillions of dollars getting pumped into it. And all of a sudden, everybody's just going to go back to normal and the economy's going to pick back up and the world's just going to be great again? No, probably not. Probably not. There's a dude named the Uneducated Economist. I don't know if anybody has ever heard of him or watched him or whatever, but this dude, I like him. He talks about lumber. He's a regular dude that is in touch with reality and talks about some good topics, talks about some good whatever. I got a mad shout out for the Uneducated Economist. If you have not heard of him or saw his channel before, check it out. He is humble and has a real life perspective on a lot of stuff, especially the lumber industry. And he was talking about, he made a perfect analogy, and I make the same argument, but the way he said it was beautiful. There's two ways you can spend money or borrow money or take on debt. Okay? You can borrow money and then you can buy, just simplify everything. Okay? And say there's only two things you can spend your money on. You can spend it on like fun and partying and enjoying and eating out in restaurants or whatever. And that is going to be represented by beer. Because you go out, you drink the beer, you have fun, you're having a good time while you're drinking it, you're consuming it, you're a consumer, and then the next day you wake up with, a hangover and there's nothing left, and you spend a bunch of money on beer, okay? And then the other thing you can do is you can spend it on like manufacturing, building stuff, creating a business, resources to produce goods or whatever. And the metaphor for that is that you borrow the money, you buy that thing, and then you add productivity to the economy, you add GDP to your country, you add productivity to your area or whatever, and you use the metaphor for that as saws. So you go out and buy a saw, and then you can chop up wood or saw wood or whatever, and then you can build tables, you can build chairs, you can build houses, you do all kinds of stuff with your saw. So those are the two ways you can take on debt. You can go out and buy beer, you can go out and buy a saw. So it's beers and saws. Okay. And he does this analogy so beautifully because it just breaks it down. Well, for the last year and a half or whatever, since we went into this pandemic, we could have spent trillions of dollars around the world. Hundreds of trillions of dollars got spent by governments all over the world. The United States, all other governments, everyone. And while we spent all this money, what did we spend it on? Did we spend it on beer or did we spend it on saws? We spent all of it on beer. We spent no money on saws. We did not build any new factories. We did not create anything new. We didn't build anything. We didn't make any new machines. We didn't create any actual jobs. We didn't do anything. All we did was spend it on consuming beer. And we didn't even buy our own beer from our own country or the beer brewer down the road or whatever. No. We bought a bunch of Chinese beer. Everybody bought beer from somebody else. So nobody even benefited locally or nationally from the beer purchases. So here we have spent trillions of dollars. We increased the national debt, in every country around the world, and basically made it so that this debt is almost unserviceable in the future with anything other than zero rates. And we spent it all on consumption. We spent it all on beer. And soon we're going to go to sleep. And when we go to sleep, we're going to wake up the next day and we're going to have a year and a half or maybe a 10-year, depending on how far you go back, maybe back to 2000 because we never fixed anything. We're going to have a 21-year hangover that we got to deal with. The worst headache of our lifetime, all because we spent it on beer instead of saws. And that is a beautiful metaphor. And for that, you should go subscribe to The Uneducated Economist and listen to his videos. Maybe you love him, maybe you hate him. He's a real dude. I like him. He talks about good stuff. He's entertaining. So yeah, that's my pitch on The Uneducated Economist and his analogy. That's the one for beers and saws. Works, looks weak. I don't think we're gonna. We got a nice little pop off it initially, getting a pull back down to the 200 exponential and simple. But if the whole market's weak, stuff like this that's been getting absolutely wrecked is going to be weak too. Does not mean we can't get a nice short squeeze and potential trade setup to play out, but. Any sphere, still waiting on this to come back down to retest the breakout line. And then obviously 200 exponential and simple. Was nice initial play in this bad boy. But again, same thing. This is a short squeeze little scalp. That's it. It's trash. Trash company, trash stock, trash chart, everything. Weight Watchers apparently is getting ready to go out of business. Thought that maybe we could get some kind of little scalp back up here to close that gap, but looks very bad. If it takes out the low right here, it's going to look even worse. I mean, there's definitely some bullish divergence starting to develop, but this just looks so weak, and it's breaking down from support. 200 exponential and simple rolling over. There's not a lot of good looking charts right now. And that's what I mean about uranium. Everybody just might pile into uranium because it's the only thing that's doing good. Walmart coming back down to 142. Retest the ascending trend line. Retest the 200 exponential and simple. Retest the breakout support at which Fibonacci is that? The 618. And then after that, maybe we can get a little scalp up here, but it's like 3%. It's not worth it. It's a blue chip. And honestly, I think retail's about to get wrecked. CSE got the, I mean, it's basically back to the entry point right here. I mean, I don't know anything about this. I'll have to look into it. I know it's one of Kathy Wood's, and that's why somebody asked about it. But, I mean, look, the trade setup played out. 17% to the upside. We hit the target within $1. Hit the measure move of the triangle. I mean, that should be it. It's done. There's nothing there now. AMAT, Applied Materials, Inc., ascending triangle. Looks like it's getting ready to come back down here to the bottom of the range. You know, part of the trade setup played out, but you really got to get this thing at like 132, and you really got to just take profits at like 140 or so. You know, if it breaks out to the upside, that's great, but I mean, it's just been consolidating at this level forever, for this whole entire year. Wheat, the wheat fund ETV looks like it's getting wrecked. Broke down from the triangle. Wait, what is this? Oh, this was our head and shoulders pattern. This is the giant shoulder. Yeah, it looks like it's coming back down here to the 200 exponential and simple inside the bearish control zone, rolling over the slope line. Bunch of red histograms. I would look at how it reacts around like 650. I mean, if this thing breaks out to the upside, though, it could crush. But right now, it looks weak. Excuse me. Western Asset Mortgage Capital Corporation, WMC. This is the one I was talking about, breaking down from key support. We had the support here in blue. We were hanging on to it, and now it's rolling over. This thing looks like it just got its throat slit, and it's getting ready to bleed out bad. It's like when you go hunting and you shoot the deer and it starts running, but you're sure you blew its heart out. That's what this looks like. It looks like the deer that's still running with no existing internal organs. When this breaks down here and retests the bottom of the range at like $1.50, I'll probably bite on it then for this pushback up, but it looks like wreck city. This thing looks like it's going to wreck. When it starts rolling over here and we start seeing like, you know, a bottoming area around like $2, $1.94 or $1.50, it's probably going to look good. But right now, it looks like it's about to get destroyed. And last but not least for today, Metro Mile Inc. Don't remember what this was. Somebody asked me to look at it. Came back up, pushed back up to the Fibonacci extension, and now it's headed right back down to the bottom of the range. This looks like a bearish reset to me. It did cross over the slope line here. It's all green histograms, but I mean, it just got 4 green histograms in a row while it just sold back off. It looks terrible. It got rejected at the 21. Looked like it was going to cross the 821 back to the upside, but it just looks terrible. This thing looks like it's about to put in new lows. I mean, I don't know what this is, but whatever it is, I think it's out of business. I mean, I'll look at this again at $2. No, you know what? I don't want to be greedy. I'll look at it again at $2.01. That's where it looks like it's going. I mean, if it bottoms out right here and puts in like some bullish divergence, puts in a slightly lower low right here and a little bullish divergence on some of this stuff, maybe it will start looking good, but it just looks like it's about to get wrecked. It tried to fill the gap right here and could not get back up here. So there's way too many sellers and no buyers. I mean, let's look at this. This is everybody that's ever bought this stock that is at a loss right now. Okay? Everybody that's ever bought this stock that is underwater, that's at a loss. And then this is everybody that's ever bought this stock that's in profit and barely in profit. So what does it look like is going to happen? Does it look like all of a sudden it's just going to go parabolic? Or does it look like every time it even attempts to push back to the upside, there's just going to be massive selling pressure and it's just going to get crushed and beat down and just continue getting just crushed forever until it goes to zero? Or really somebody probably buys it because maybe it has like a machine or something that's worth something. Probably that one. Probably just going to continue just getting absolutely wrecked. I mean, what was this? A SPAC? It was $10. It went up to $20, and now it's $4. I mean, it's probably going to $2. So 50% down from where we're at right now. And then we'll take a look at it. This looks absolutely terrible. Probably one of the worst charts of the day so far. So yeah, that's it. We did it, guys. We made it to the end. If you're still here and you made it to the end, make sure you let me know in the comments. Like, subscribe, share it with your friends. Tell your dog to smash those like buttons. Give him a treat. Give him some celery. Oh, wait, no, dogs hate celery. Give him a pretzel. Nope, dogs also do not like pretzels. If your dog likes pretzels and you want to prove me wrong, please let me know in the comment section. Bubbly says, yeah, boys. Our Kit says, great stream. Good to see our Kits. Our Kits in the house. Your mom is beautiful. She's beautiful to me. Bubbly says, don't have kids, but they're doing great. Don't have kids, but they're doing great. That's funny. Oh, man. All right, guys. That's it for today. Hope you guys enjoyed the stream. Right around the 3-hour mark, 2 hours and 45 minutes. As you have noticed, I'm doing like some short excerpts from the streams. So like I'll do just to put out some static videos and shorter videos for people that don't want to watch whole streams or don't get like, YouTube doesn't like recommend them or whatever. But basically, just doing like 10 to 15 minute little excerpts on a couple different things a couple times a week. So if you're watching through the full screens, you don't need to check out the excerpts. Feel free to, obviously, share them with your friends or whatever. Or if you just want to see a certain class or a certain asset or whatever, or just a reminder. Trying to pick like important ones but different ones every week, and then doing like the old intro and outro on them as well, but it's not going to be any fresh or new content. They're all going to be from the regular streams every Wednesday and Sunday at 8 p.m. Eastern Standard Time, and then I'm going to try to do an excerpt, like ideally 2 live streams a week and then like 5 little clips, so I'm putting something out every day. But realistically, it's probably going to be 2 live streams a week and then like 3 clips, because I put a lot of time and effort into this channel, into the indicators, into the group, into everything. And right now, I'm really trying to focus on these next little bits of the course. I was going to do the next video as one part, but I am breaking it down actually into 4 separate parts because they all deserve an equal and important portion in it. So it's taking a little longer than expected, but I will have those, at least the first one, out. I mean, probably this week, maybe sometime. I don't know. We'll see. I'm so busy. I'm tired. I'm exhausted. There's just so much going on in the markets right now. And then also the amount of time that I put into this channel for like very little to almost nothing in return. It's hard to stay motivated sometimes with it, but I do appreciate all the trade group and everybody that's in there, all the positive feedback and everything from the channel. And it's like phases with anything. I put a ton of work into that new indicator. It's awesome, and now it's nice to just sit back and enjoy it. And then also we're at key times in the market where everything is rolling over. We're potentially topping. This could be the end of crypto trend, could be the end of the stock market trend, could be the beginning of parabolic trend for lots of stuff. Oh wait, no, just uranium. Everything looks like shit but uranium right now. So, and of course I sold uranium last week. It's the only thing that looks good this week. I didn't sell it all, but it's kind of funny. But anyway, yeah, that's it for tonight, guys. Appreciate y'all. Everybody have a good evening, good stream. Appreciate all the comments, likes, subscribes, all that good stuff. Crypto Trend Trader, and I will see you guys on Wednesday, Eastern Standard Time. But in the meantime, I'm out of here.